Ba-dibba-dibba-doo, ba-dibba-dibba-doo. Do 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 do. 3% up. Oh my goodness. Let's go back up. You guys. Not really a fan of that motion. But why not? I mean, up is up, right? Kind of. It might be low enough. I did say 444, 436. Maybe it's low enough. I don't know. Whatever. Well, I was right about a bounce, so that's good. Of course, there's no way to say any of that. So we were going to have some kind of a top here. That was like a kitty cat ears. Then we were going to come down and bounce out. This is not quite what I wanted to see visually, but can't exactly say it's way off. That's not true. Oh man, Titleist guy. Oh boy. Well, we didn't get 472. Do I need this on my chart? No. This one, maybe. But I'm not going to have the extension there. I got to get my setup fixed. Get back to the way it used to be. Hey, Rosalind, how are you? Slowly but surely. Indeed. Pam Alala. Hey, you guys can hear me, right? Just double checking. Because sometimes when I do something on this mic, it stops working. So before I keep going, let's make sure that it's actually working this morning. Yep, okay, good, thanks. Sometimes it's like a specific, you guys don't care. It's a specific sequence of things, and then it just stops working all of a sudden, so. Hey, so interesting. Well, I don't get it, man. Gonna have a new president next week. Or whenever they're sworn in. What's happening? That's what's happening. Whoever it is got probably the most important job in the world starting next week. Kind of makes you enjoy what you're doing, I guess. I don't have to go to work worrying about the fate of the free world. But yeah, if you guys haven't, get out and vote. You guys said next week. It's not next week, Booksy. Well, I'm thinking like 7 days. I know that we probably won't know till the week after for sure. I feel like last time it was really slow, but they had all those late voting changes, electorate things. I don't know. I'm not the oldest person in the world. I've lived through almost 10 elections now. This will be my 9th election, I guess, technically. Kind of ages me, but you get the idea. It's hard to believe. It's not been that many presidents, though. So that's why it's confusing. It's like got a lot of the same people in office for more than one term. It's coming up, and it's going to be one crazy week next week. So we're going to do our best to kind of settle down at the end of this week and then move on to the next. There is some TA to be done. This is an interesting setup here, and I went out and looked at the overall picture, and I think I could be a little bit off here, but I think it actually ends on Wednesday, this M cross. So at first I thought that it was like this, where it's like really even, like a 1-2 kind of thing. But then I was staring at it yesterday, and it just occurred to me that it's very straightforward here. And it's not like I didn't see it, but it was just like more obvious than I thought it was. So this is the first shape, and then this right here is the second shape. And I don't know why I couldn't see it easily, but I couldn't see it yesterday in the waves. I was like, or the day before yesterday, I was like, I don't know where it is exactly. It's choppy. And the reason is because it's kind of shrinking. So a shrinking iteration to the upside could be bad. It's not necessarily bad, so I don't want to make it sound like, oh, it's a horrible thing. It's going to crash and burn or something. That's not true. But it does have tendencies to break down, so it's just something to keep in mind. So why would I think that this is the case? How do I know for sure? Okay, well, I don't know 100% for sure that this is even the other side. This could be like the bottom. We talked about that yesterday as well, or 2 days ago as well. Like there's a top and a bottom of a wave, and I don't know for a fact that this isn't the bottom. And if it is, then this next move would be like a bigger cross. This would be like a 1 and then a 2. So you'd have this as wave 1, and then you'd have another here as wave 2. This is more or less what I expect to have happen, because I think that wave 1 and this bottom wave are approaching the edge, and it doesn't really make sense to have both waves before the edge. Does that make sense? Unless you're going to like really take off afterwards. So what I mean is that, for lack of maybe better explanation, so like on this little example that I doodled the other day, when you're watching a wave move, so if you were thinking that this was the bottom and that this is going to move up, what that would tell me is that there's probably going to be a push up and then a pull back. And that's different than if you think that you're basically here at the end of a double 1, 2, because then when you get to the end, you just kind of take off. We've seen both. I got to be straightforward when I say that I think what's preferred is actually the earlier one, because when you go back and you look at, so if you were picking like one of these two things, what would be preferred is that you have that pullback. And the main reason for that is kind of obvious, which is that you want to go back and retest the creek. There's a lot of secondary reasons for that, which usually have to do with gaps and big run-ups and stuff, and we're not going to get into that right this second, but a lot of times whenever we get this and it's kind of coupled, this is sort of what happened back in May. It was going downward, but it had the same approach. It pushed down in that spring. It can often leave like a gap behind if it just takes off. It could even come back here and test this one, which is what happened in May. It did come back and test it, but at the end of the day, like it ultimately never, it left a gap down bottom like here, and just in terms of the sequence. So if you're wondering like, what are you talking about, Booksy? So what I'm saying is that it would be better for us to have a wave 1 and then this be a bottom wave that's approaching, like it's coming up to try to break out. So instead of it being maybe this shallow, it's like really steep. So one way to look at that would be like just like ramping this guy up quite a bit. So maybe the first, which is kind of what happened here, is like the first push here actually went higher, which is pretty unique. That's why I wasn't sure. It's like, well, it jumped really early, But then it does this thing like on the second push too, where it comes up higher as well. So like both of these are really, really high pushes. And so if that's a bottom, then the next one potentially would look more like this. I don't know what the second push might look like, but you could have maybe a 1, 2 here where the first jump checks. That's possible, like something like this. And then the second one, so it ends up looking like that parabola. So notice what happened here is that it actually displaced what we thought might happen down here. So that's a little backwards, but it's not impossible. And I still think this has a lot of similarities to what happened in March 2022. And in March, it did the double M before, and then it pulled back, and it just took off. I mean, it just went right up to the SOS, right through all those other levels. That part does not come into play, really, for me. Like, I don't really worry too much about what's happening here to there. The only spot I'm concerned about is 5. And everything else will just get passed up. The reason for 5 concerning me has to do with a possible distribution setup. And there's really only one main place that you need to come back to. It's like 505 specifically. And everything else is kind of like meh, It could stop there, but it doesn't seem likely. It could stop there. It doesn't seem as likely. Really, the liquid center is kind of like the place that you'd go back to and for one more hoorah, pump it up to distribute. The reason for that is that you'd be doing basically like a head fake. So if you go back and you look at what happened on this trend, I know my chart's really messy today, but this little yellow line coming down, this is like the big one that we're dealing with right now. You can see that when it pushed up, when we came back down, it actually builds out a preliminary support right here on the way down. Like bulls are trying to stop it from falling as fast. Well, as soon as this second top is created in June, that really defines the rest of this chart, like in the end. And so from there on out, it's a series of push up, then distribute, come back down, push up, distribute, come back down. So you just need to stop seeing that happen, right? Now, you might be questioning, well, what happened to the whole like beak thing? I mean, you had this beak going down. Well, that was kind of like part one, right? you have like a multi-stage breakout here. So part one is still this. This is still like absolutely important because it's pulling away from the creek. So as it does that, then you have to advance back to the creek, which we've done, and we're there. There's no doubt in my mind, there's nothing really else here except for the next ice level, which is up here again. Maybe around 5 is the lower one. If you drop this line down a bit here, you can see it visually. Like that would be the biggest, most likely potential place, I suppose, if we were going to stop somewhere. And there's some correlation to where that would be. So if you did get an early distribution, I think 505. But everything else is kind of straightforward. Like I went back and I looked at all these like, it's like a lot of layers here. And I know it's a bit of a mess. Maybe we'll clean it up some today. But there's a lot of purpose in the mess. And that is that I took these outer creeks, the ones that kind of haven't really been used very much. Like this is one, these two tops. And I looked at where it likely correlates to where we jump a particular horizontal level, such as triangulation. When you go back and you look at waveform patterns later on, if you look at it in retrospect, you always see that these kind of pointed and triangulated towards things, like to the upside and the downside. I think it might be possible. I don't know, man. Maybe one day I'll get really ambitious and I'll create like a program. If I could create like a program, what I would do is I would probably try to create a program that interpolates like tops. I don't know how in the world you could do that, but maybe you like mark off 1, 2, maybe you mark off like all the tops and then all the drops, and it does like a combination of tops to drops and then vice versa or something. And then like if you did that, then it would just mark off. It's kind of what I do anyways. But then you could like triangulate positions for you with horizontals. It's too much. It'll never happen. I don't know what I'm saying. You guys are like, yeah, Will, just ask the AI computer to do it. Problem is I'd have to teach the AI what I want it to do. Like it'd have to know what I'm trying to get. Because what we're looking for is those triangulations. Like, hey, we're heading this direction, you know, and then this is the top we're trying to get back to. Like that's the high from the low to the high. And then ever since we hit that high, we kind of like move back towards it. So like these are attempts to kind of regain that high as it goes along. And it's like every time it's doing that, it's creating trajectories. And what you find is that when you go back in time, and we've done this like dozens of times on this stream, so I hope you guys aren't bored by it, but when you go back in time, you find that those trajectories have played like a really important role in the overall setup. It makes sense to me because everything is iterative. Everything operates on different levels. So like these little micro waves, 1, 2, 3, you know, down here, yeah, they look kind of like they're not doing anything super important, right? But then when you look at the bigger picture, there's like a huge wave, you know, going back. And this is a really good example here because it's just the last time we had a big bottom. Like we had this massive wave that was a 2-year cycle. It went from May to May, returned back, and it's really tight. It's a really good cycle. And when you go back and you look at it, it's like really, really, really good. Almost impossible to kind of deny the continuity there in that wave. And then looking at it in retrospect, you're like, oh, yeah, you're totally right. Maybe, unless you don't want to say I'm right. You'd be like, yeah, you're right. It does have like continuity in the waveform, you know? So when I think about like, okay, what am I visually seeing when I see like chop on the short term? I'm seeing like a math formula that's got an end in mind, but that's got other things to do first. So like, it's almost like you have to think of it like an average. Like if I'm chopping all over the place, yeah, you as a little person, me too, I'm a little person too. Us as the littler people, we have to kind of see it as what it is. Like, oh, it's hitting this level, it's hitting that level. And then we can use other things like Elliott wave or Wyckoff to kind of help us, or Fibonacci's to kind of help us estimate where it might go and how it might move and what's going on behind the scenes. But in terms of sine wave analysis, the nitty gritty stuff seems random. But if you can kind of let your mind relax about it and think about, if I'm a computerized trading program and like heavily driven by computerized trading, there's consistency. And so there's going to be a nature of build out that makes sense. And like when you go back in time, it's almost undeniable. Like it's not possible to look at something like this and not see that. It's like way too obvious, you know? And so when I go and I look at this stuff, I'm like, yeah, all right, maybe this was just pointing towards this top, but at the end of the day, if it keeps doing the same thing and it's a repeated process, then there's like an evidence there that there's an element of determinism perhaps in terms of like which direction bears and bulls are trying to go, right? And when I go back and I look at the history of this stock, and I already got this one right here, it cannot be looked at as like, oh, it's just this random, these run-ups are all random, trajectories don't matter, you can't possibly predict where it's going to go. These kinds of arguments that are made are just kind of stupid, like for lack of a better word. It's almost like looking at yourself in the mirror and saying it's not you. You know, it's like, I don't know what people want from TA, but this is just one of those, like, so like why is this not enough? This is just one of those things that like it's there, right? And the same applies for downside, by the way. So you might think that like, oh well, that's one thing, but what about, well, going down is another too. You have the same kind of market trajectories, they're built in. And the way I had described it a long time ago was this kind of an okay analogy, but it was basically like an archer who's like drawing back a bow and they have a target in mind and they keep attempting to fire and they're not being successful, and they may not be successful, right? They shoot, and eventually they are, right? Another way to put it would be like two people each have a steering wheel in the same car. One person wants to go this way, the other person wants to go this way. And so they're constantly at odds with each other. That's probably a better way to do it. You guys are like, it's supply and demand, Booksy. Yeah, I know. But like even in this, early on in AMC for years, this is built out. If you think this is just AMC and you think that, oh, this is just this weird stock. No, like everything does this. GME did this also to the big run up. That might surprise you guys, but it did. It has the same markings. It did the same thing on the macro. So there's an argument to be made, like it could be said that it's predetermined, and so therefore all the little nitty-gritty stuff that you see on the micro, these little micro iterations, they're giving you a glimpse of maybe what the behavior of the trading is, and they also might give you a glimpse of maybe direction. And I think that's true because again, it's kind of built into the larger. So like as this is going down, and it is predominantly going down here, bulls are trying to like advance back up. And it becomes a very simple equation of like, oh, well, every time, you're pushing this down this direction, and as you're doing that, bulls are trying to regain, something that's being lost. I think it's simple enough. I really do. So my expectation is on the downside of a wave, you're going to see evidence of where you want to go if the wave completes. And that's the thing that I think gets people maybe a little bit more confused and maybe a little bit riled up about stuff like predictive nature stuff, is that it doesn't mean it does go. So there's a lot of instances back here, for example, like where you have a mild kind of predictive nature of like, this is where it could go, right? But did it ever go there? No. Could it have gone there? I don't know. If there was enough demand and their just supply was just not there at all, would it have gone there? Probably. I think at the end of the day, what I would be looking for would be probably coming back to this level, right? And it shouldn't surprise anybody, like right there where it dropped off, it shouldn't surprise anybody then that what we do have is we have an attempt to run back up, near and dear to that spot, but it fails, And the thing is like, was this predetermined to fail? I don't know. Maybe. But I think that, yeah, because BlackRock decided to sell a huge chunk of shares, they probably were going to get it, people riled up and then dump it. And they were taking it as an effort to come back. Well, we find this is the same locally too, though. And that's the thing is like, this did the same thing down here. And then it wasn't pointing towards, some huge high top. It was just pointing towards, even right here, it was just pointing towards a recovery back to the next floor. So the issue is that we don't really know if something at the end of the day, like you could make great predictions, but at the end of the day, like you don't really know if it's going to come back up here unless it breaches this. And that's not really a lot to go off of because you have to sort of assume that it's going to do certain things based on other factors. So like one thing right here that's easy to identify is the creek, right? So there was another major factor here, which is that it's not just a level that we broke down from, right? There's a massive wall there. So it makes sense then that if you do not go beyond this point, like this never happens, right? Like this doesn't occur because you never got beyond the wall. I mean, it's super simple in some ways. Like this didn't give way. So one of the things that I had been kind of arguing with some folks about for a little while was this idea of like $20, right? You remember we were talking about this and you guys were like, well, why don't you think it's going to go to $20, Booksy? It's the wall. Because just like this exists here, there's another one that exists right here. And there's a nature of like, yeah, I want to be optimistic, but at the same time, you can't know until you get there. And to be very honest with you, it's essentially the exact same setup. And I know this is going to be sort of anti-Booksy, but I have done this before. I'm not like embarrassed to do it. If you take this as a bars pattern, and you know this is just cat ears, and you drag it outward, it's impossible, again, to deny the continuity there. It's essentially identical, even like down to the bones of this. You see that? Like visually, it almost looks the same. The only major difference is that this part, that this August moment didn't come up higher. You guys remember August? All right. So apparently there's people saying that like I've only ever called one run, which is May. That's not true. I called March 2022 and August 2022. So I'm giving credit to myself there because, yeah, like I've been wrong on my handful of times as well. And you might say, oh, it's happenstance. But in terms of like the big runs, I've gotten most of them right. In terms of the big tops, most of them right. The top I didn't get that really hurt was the August 2022 top. That's the one that got me the biggest. And that one I didn't get right. But if you recall back here, I had originally, probably most of you weren't here then, but I had a target of like $25 to $27. We hit the $25 to $27. I had a secondary target that actually went higher, and I had imagined it was going to come back up to like 30 and finally come back up and retest. I think it was like right here, if I recall. It was like $30 or something. And so I thought it was going to make a secondary move. And part of that was built on the setup here. It was one of the best trading times I ever had. It's why I made like an incredible amount of money on this August run up that I lost right afterwards. Okay, it's not there anymore. So it's okay if I say, yeah, I made the money. I'm not bragging. I did it. And I did it based on the setup here. I took proportions and I measured them out, and I also found some interesting things with like diamond bottoms and stuff like that. And I use a lot of that stuff nowadays to determine those wave patterns. But the main thing that I gathered from it was that there was a big wave here. The center was like right there in April. I want to say it went all the way up like that. And so I had a wave on my chart, like something like this, something along these lines. And I thought it was going to hit there and then continue. You see that? But just like here previously, sorry, the chart's wigging out. Just like here previously, it didn't happen that way, right? So one of the things that I didn't quite get right was the creek cross. So right here, when it jumped, I knew that was the creek cross. I figured it was happening. It looked really good to me. I was really excited when it came back down in August. I went like all in on it right here, like right before it took off. There was a lot of other ways to determine that was going to break out. Like recapturing that major level was really important. But what I didn't recognize necessarily, I was viewing it like this, like that's what was happening right here or something like that. What I didn't recognize was that it was probably this right here. And that really at the end of the day, like all of this is just a top. And so I had some issues with the way I was determining it. Like this was a larger one too, with a push out. Anyways, point being that, you know, this enabled me to triangulate almost perfectly so much like we do up here, where we're using kind of triangles to help determine maybe where you might hit a target later, even if it doesn't, because there's a rejection there. I did something similar here, but I did it with trajectories on a waveform. So I had like trajectories coming down like 47 degrees, and then I had trajectories coming up like 47 degrees. And this is basically what I built my whole thesis on, and why I thought we would come hit this mark from here. Pretty crazy, right? To say it's going to run over 100% and to call out the number and to get it right. But it was based on the macro wave, okay? So the thing is that you can get 99% of it right, but at the end of the day, if there's a wall that you haven't quite gotten over, and that's kind of what happened here anyways, it's the same wall, right? We pushed up against it, we just distributed almost on top of it. It was like different time frames, it looks a little different, but it basically was like right on it, and it never took off. That's a moment of contention. So one of the things that I've been doing lately is we use this kind of stuff to help determine price action, but I've been really cautious about saying it's going to do this or this when it hits a creek or when it hits a resistance. And so like the $20 mark that a lot of people were talking about for months and months and months back here, and now they're not really, because I guess some prominent people aren't talking about it. The reason that I didn't think that was going to happen is because we have the same thing, basically. Like we basically still have the same creek. It went down a little bit, but it's there. That's the creek, visually speaking. You see that? And now I'm looking at it and I'm like, oh, look, hey, that actually goes to where I drew this other thing yesterday. There you go. So another kind of proof for you. But see that? So like there's an issue in that you can't assume if it ran up right now that it would breach $12 or $13. Like if it ran really fast, it could get to like 1380s, which is what I've been estimating, right? As high as I think it might go. You can't assume that it would just go beyond there. There's too many times on this chart where the secondary motion doesn't move, right? You think it's going to go, it doesn't go. You think it's going to come back up, it doesn't come back up immediately. And a lot of that has to do with stuff like M crosses, right? Like once it hits here, what needed to happen? What needed to happen was it needed to come back and retest the tops here. And then it went way beyond. And that's really the moment that Stockfather called it out. I remember, and he said it dropped too low because it came below that portion. This needed to come back up. So if you were to see a run here, this is what needed to happen. And I think I even had it on the chart like that or something. I had something that looked a lot like January on the chart. And now we've got a similar situation where there's like, you've clearly got a cat ear here. You've got that downward arc. We haven't even tested it. And some people were saying we were going to break it. Well, I've learned my lesson with AMC. there's very few times where if you haven't checked something already, that you're just going to blow past it. And if you do blow past it, it's usually not for the best. Like, it's usually because there's a distribution going on and you're going to come hurtling down like comet from space afterwards, right? So like right now, one of the things that I'm wondering is like, is there really anything here that's left to test? And the short answer is I don't know. That would be the easiest answer, is like, well, I don't really know. The more involved answer is it just kind of depends on the operator's desire here. And I think it depends largely on them coming back down for a low. I think what they're going to do is a whip around. I think they're going to, this has been my thesis. This is where Booksy gets into theory, and I'm always doing stuff like this where I'm trying to kind of push myself to think more and more like an institution might think and drive the price high in order to get back down low. Like come up and get a lot of people buying, get a lot of people selling. Jack up the liquidity, jack up the volatility, and sell into retail hands from like $6 up to like $9 again. Let's do a major sell-offs and then drive the price back down about 50-50 and come back low. Okay. And what that does is not check this creek. So again, you might say, well, if it doesn't check that creek, then how do we advance without checking the creek? You just said, Booksy, we have to check the creek before we advance. I'm not sure. This is the one thing that's been bugging me. It's been bugging me a lot, and you guys know this because I've been talking about it like nonstop. I don't know what the heck happened to 13, but it doesn't seem like it has to go there. On some levels, it feels like it doesn't have to, because it's like, well, yeah, like in theory, it should be hitting. I mean, I'm being genuine here, right? When I say stuff like that, I'm not trying to like pull anybody's chains or anything. I'm trying to give you guys like a really simple understanding. Like it genuinely could be rocketing up to near 13 on December 9th, right? Like that would be adequate. You hit certain markers. The main concern I have is I'm wondering, because I keep looking at the overall setup, I'm like, you don't need to come that high aside from just hitting that creek. Like that's the only reason at this point. Because maybe to sell off even more, because you don't have any real need to kind of come down super low, potentially, right? And I've been back and forth about maybe the lows that we hit. If we do make a new low, I don't think it's going to be substantial. I think it'll be in the 2s, not in the 1s. A lot of people are saying it's going to be like $1 way down here. I don't think so. I think substantially, like it could come down and just fill the gap and be done, you know. But I've been back and forth about this quite a bit on the channel, and it's bothersome. And so one of the things I'm trying to remember is that I'm just going to kind of play it like I would anything else. If it hits that top, I'm probably going to get rid of most of my stuff if it hits 869. And that might cause me to lose a lot. $5 extra or whatever, $4 extra is quite a bit. But when you're not sure about something, you need to just be smart. Like I need to be smart. And if I'm not sure, then I'm not sure. So part of the thing that's got me a little bit bothered is like the more I stare at the chart, the more 869 makes way more sense. Mathematically, it's like perfect. It's perfect. I mean, it's like 50-50 from the bottom we just made at 403 up through 596 or whatever up to 869, and then it's 50-50 back through liquid center down to the gap. I mean, it's exactly 50-50 to the gap, going back through 5. I mean, it's crazy. It like meets all the criteria that you need to meet just to get the gap fill. And then I did this chart. I shared it on the Discord yesterday. And again, it's like, well, you're still missing like a huge section right here though, Booksy, right? Like where is the checks on all these? I don't know, you know, and maybe that's a problem because if they don't do that here, there's a question of like, could you come back down later? Well, we might. There's no telling if we get up here later on, if this does another long-term distribution. It's totally possible. And it kind of makes sense too. If you look at the big picture, to come back and like check this creek again, check all these levels again. And it would be a slow walk down. It wouldn't be like instantaneous, but sure. Like, could that happen? Sure. So there might be a reason that we don't check certain things, but I'm not really sure I want this to happen this way. It's just sort of what I came up with that made the most sense, and it has the most continuity. So first of all, this arc is literal copy paste from this arc. So if you're wondering like, where did that come from? It's the exact same thing. The only difference is that this starts in May and this one starts in August and September 1st, like end of August, September 1st. That's it. That's the only difference. This one starts in just a different month of the year, different quarter, okay? But otherwise, I just took it, copied and pasted it, and it's right there, okay? It's the same exact thing. So you'll see that like there's a lot of interesting kind of points you can make about this, about like, oh, that's kind of interesting. It's all pointing towards this top over here, blah, 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 blah. The symmetrical nature of it isn't lost on me. What's really fascinating is this is like a June run-up. It's kind of the opposite, like June to January kind of thing maybe, or June to October kind of thing. But this whole setup right here is all, again, following through. Now, if that were all I did on it, it would just be like the other chart I did, and you'd be like, okay, well, why did you waste our time doing the same thing over and over again? I didn't do that. I went through and I looked at markers. Like this marker right here was really interesting to me. This breakdown, that gap that was created up at $9 over 937. I looked at the waves, and they are consistent. If you take these and like you copy that and you drive it down, you find that those waves are very, very consistent here throughout, especially in this area and this area. There's just a lot of really interesting points of continuity with the concept that this is the big wave. So just like I was talking about a minute ago in, and this is what I was looking for, by the way. If you went back and looked at, go back and I don't know if you even can anymore. Maybe some of the earliest stuff I did this year, looked at this big picture, and it must have been, geez, it must have been last year though. It must have been 2023. I don't know, because I thought it was up here. Whatever. Point is, I had been looking for a macro wave that might come down low this way and go across, because this was an expanding waveform. There's a wave that's kind of going up and down, up and down, up and down here, and it's getting larger and larger and larger, and I did a chart on that. So I was looking for that big waveform. Well, I just copied and pasted this one after noticing that it's anchoring on the same levels and it's kind of playing the same rhythm, like it's hitting the same musical notes as it's going along, especially like the bottom, the gap, the top, the secondary top on those hooks way up there. So part of me is like, I already sort of thought it was going to be a waveform, but I don't think I would have copied and pasted this until recently, which is what I did. Would not have thought, oh, it's going to be pretty one-to-one or fairly one-to-one with that same pattern. So one of the things that might bother you about this is like a 2-year cycle. So this goes from 2019 to 2021. And in the middle, you have COVID, right? But in the middle, you actually are not in like the center of the bottom. You're kind of like earlier on in the bottom right here on the center. So it's like, there's a lot of weird little things like that that might bother you. Like, oh, it's really long. And, you know, what are you saying? It's like the middle's like only right there. Are you saying we still have like a lot more? Potentially, yeah. Because in theory, again, just looking at this simply, if you can kind of like gentle your eyes here, really all I'm saying is that we're just going to get like a wave around a wave. So if you look, again, gently at it, you can kind of see visually what I'm driving at here. Is actually a really simple like waveform question, right? It seems complicated because you're like, my charts are hot and messy and gross. You guys are like hot and messy. Don't say stuff like that, Booksy. Um, you get what I'm saying. But like they're not always the prettiest, right? So I'll take that. So it may seem a little bit like, oh, well, your charts are just kind of all over the place and messy. Let me do this one more time. But there's something important about the nature of this as a wave, and I'm actually making this all connect. So if you're wondering like why is he going on and on about this, I'll tell you, okay, in a minute. There's something really significant about it, which is that, remember we were talking about earlier, those little micro iterations up here, those things that are pointing and those trajectories that are pointing are doing so on like this big wave down. Like it's at this downward trajectory coming low to try to hit a target, and then it pushes back up. And while it's doing that, though, there's something else interesting going on, which is that you have these very not so subtle wraparounds, right? So here you wrap around the arc. Here you wrap around the arc. And you can see visually that every time we're doing this, we're basically doing like a 50-50, right, around these arc patterns. Notice that there are places where it compresses and that the compression goes away from the arc and then back up to it. And even here, it may look random, but it's not random. This is one of those things that every time I look back at the January, I'm like, what exactly was random about it? Like supposedly it was this random thing. That is exactly like a 50-50. Now, it may have been that they knew that somebody shared with Vlad or whoever that the buy button needed to be removed right there. But that's exactly like a 50-50 move around that very symmetrical looking arc. Okay. So one of the things that might matter to you, and it matters to me, is that anytime there's like a U shape, right, and this happens frequently, there's a drive down. That's a 50-50 cross. See that? It's the same thing here. So basically, this shouldn't be thought of as like, and you're going to start visually seeing it, it shouldn't be thought of as like, oh, it's just down and up and it hurts and all this stuff. Yeah, I mean, it hurts a little bit. But to kind of see it not go the way you want it to go, but it should be thought of as like a counter movement. And this is where I had the early pleasure of talking about slingshots without really kind of diving into it super deep. So I'm like looking at this right now and I'm developing so this is like, we want to go up, but first we're going to come back down and shake out, and then we're going to get this really big slingshot move back to the upside. I'm going to make this a different color so you can visually, again, see it a little better. So you get what I'm saying? So why does Booksy think it's going to go to 13? Why does Booksy think it's going to go to 869 or some ridiculously, whatever the number was? Why does he think it's going to go to some precise number? Because it meets the criteria for this. That's why. Because I don't think they're done with the downside. So what I think we're doing is we're going to push away from, right? I think we're going to push away from that. Now, this one's a little different. And you might think like, well, it doesn't really push that far. No, it doesn't. But at the same time, this is it's a little confusing because this one comes back up here, pushes away, right, and then launches down. This one actually comes back up, pushes away, and then launches up, right? You see the symmetry in it, but there's maybe an element there that could be a little confusing. Hopefully it's not too confusing. It really has to do with that breakout. I mean, if you look at the levels that are being met here, they're the same levels. But in this case, it's holding beneath, like this is $67 now. It's holding beneath that. In this case, it's pushing above it and then ultimately finding support on top of it. So a little different, right? So this is essentially just a wave around a wave, right? So if that's the case, then we don't really need to do like too much. That's too crazy. And this is what I did in this chart. Is So I looked at this and I thought, okay, so I really want to do is determine maybe where that timing is. How low could it go if it broke down versus breaking out? Where would maybe the end of that local wave be? Blah, 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 blah. That's just timing stuff as best as I can. This is an estimate of timing, by the way. This is not like the best estimate ever. I just think it's a good one. So this makes sense to me because you're pushing away from, and this is why I like this one a lot, because you're pushing away from what? Well, you're pushing away from 505. Okay? So in terms of like a wave, you're pushing away from 505. You're pushing away from like a couple major trends upward, which you talk about with like the waveform analysis. But you're pushing away from that 505 marker, which could be thought of as like a middle marker here. And you notice that 50% above 505, we came down low enough. We talked about this before too. It's like we came down low enough. I thought 460 was low enough, to be honest. So just for the record. But we came down low enough that now if you do a whip around, it's like 630. You see that? Around that place that we left from. Like this is ultimately where we pushed down. It's like the key pivot on the middle here. It's like 505. So you went away from it. We've got enough trajectory and we've got enough push away now in the tank, right? That you could return back. So this is like that motion right here, right? You can return back to 630. So similarly, it's like, I know that there's a way to describe this simply as like it's a spring or whatever. Yeah, that's totally true. But like if we were looking at this again, like helicopter view, and we were looking at this only that way, we may not notice the similarity that happened here as well. So there's an attempt to kind of go up. There's a rejection, right? And then when that rejection occurs, I would say it's like right there. And it's a pretty small one. But when that rejection occurs, maybe a better way to do this, because that's really where it rejects finally. You guys are like, it's way too small. So it's building out until there. The reason I picked that one is why? Because of the breakdown. See that? So then it builds out, and then you get a cross of this marker here at 50% from the bottom. And that gives you the top target, and it's not even close, it's exact. There it is, right there. And what does that give you? Well, ultimately, it also gives you an SOS, right? Voila. Magic moments. You see that? So even this right here in this bottom region is a little mini slingshot to get you into an SOS. And then to try to continue, you have to back up. And that's what happens. It backs up to the creek here, and then it jumps again, and then it jumps again, and goes up. So even in like these little micro downward waves, you have the same exact thing happening, right, as you do in the big picture here. So why do I think that this is going to happen? I don't think it's because I'm randomly guessing at numbers and I'm trying to like, puff myself up or get something. I really genuinely am just looking at the same factors right here. Like this to me is like an identical factor right here. Like this is the middle point, the breakdown happens right there. Guess what? That whips you up to the top. It gives you a rise up to the 50% top, which happens to be the SOS. Maybe that needs to come back down, and check some levels. I've got 1, 2, 3 here that are already checking. It's very possible it just goes up all at once. But it looks like mid-November to me, if I'm just guessing. There's other ways this could happen. It could just be a massive gap up. It really wouldn't matter, right? In the end, the timing is sort of subjective, and it's probably going to be based on elections in November. But hopefully you guys see what I just did there, right? So this is the exact same model. It's just doing it in a much larger format. And then what baffles me about this in a good way is that if you look at that 403 mark, again, it's like it's not even close. If I look at the 403 and then I go to 50-50 around the top here, I get that 869. And that 869, again, you might say like, well, that's just one possibility, right? Like maybe we go up and we double that, or we do this or whatever. Yeah, maybe. Like, I don't know. At the end of the day, it could go higher. Maybe it goes to 13. But what struck me about 869 is that if you look at that motif, again, 596 being the peak, 403 being the bottom, 869 being the 50-50, when you take that and you reverse it, right? If you take 869 and you reverse it the other way, and you go back through the liquid center, and it's going to be a little bit dicey here, maybe to visually see it. I'll try to scoot some stuff around a little bit so it's easier to see. What we find is that the 50% marker on this right here intersects 505 and intersects the arc right here on January 21st. So I actually have it over a little bit, but it intersects both right there. Right here. So again, we talk about criteria. You're like, all right, so what does that mean exactly? Why did you go there instead of 5? You could have went back down to 5, right? Yeah, but remember, it needs to go through what? The red arc. Like that's ultimately, if we're pushing away from that arc, it's so we can drive the price back through it. So again, it's like this would be the big picture of all that, right? You guys are like, yeah, I think you're right, Booksy. This would be your big picture analysis of this. Like that's the wave down. That looks pretty good, doesn't it? Oh, this actually looks pretty good. That would be your wave down. Your push out here would go up to the top again, whatever, wherever that is. Then the 50-50 back through should be here. And then you would 50% around the red. Well, it just so happens that if you 50% around the red, the closest target is the 505 liquid center that you took off from back yonder. Now, I don't know if that's the same here, and I don't think it is. It might be close. I don't think it's identical. If that's not enough for you, then I've got something else. It's not quite the same. This actually went low. This even goes beyond 50-50. Maybe I've got this arc drawn a little off, but I'm not going to change it just because of that. It's still really close to a 50-50 wrap. And it actually crosses here at 23, which is pretty much the same level here. You see that? So if we were comparing the two, like that's what we would do. And we would say like, oh, it's going to push up wherever it goes. That's great. Maybe it goes to 8 something. Maybe it pulls back and then it goes to 13. Maybe it just goes to 8 and then it comes back down. Doesn't really make a huge difference. When it comes back down, it triangulates to this region here, which is close to the 50-50. Unfortunately, this actually goes beyond the 50-50. But I'll say this. If I push this back up, check this out. You guys are about to have your minds freaking blown on a chill Friday. Look at where this is aiming. Now, did it go further? Yeah, I went further. But look at where it's aiming. It's aiming for the gap. You said you were going to blow my mind, Booksy, but this isn't blowing my mind. So what? It was aiming for a gap fill? Yeah. But had you known that, it was probably going to go for the gap fill ahead of time. How would you have done this? Let's say you didn't have this information. What would you do? If you said, oh, there's a gap there, it might close that gap. Here's what you would probably do is you would look at where the gap is. You think it has to go to close that gap. You don't know how high it's going to go, right? You're back here. And you're kind of like, I'm not sure. You know, it could go up to 8, could go up to 13, just like we're talking about now. How do you determine that? Well, what I would probably do is I'd go to that gap level and I'd say if I'm trying to get to the gap, at least to the gap, I'm going to take this marker, I'm going to drive it back up through the red because that's where I think it's going to go. I'm going to maybe estimate that it's going to hit that center liquidity that was built since that's an anchor point for supply and demand, and I'm going to do that. And this is going to give me the best estimation that I can get for where that top's going to be. That requires a little bit of predictive thinking. It requires that you see a big picture that needs to come down. If I were to look at this and I said to whoever, I don't think it's going to come down again, then this wouldn't make any sense. But if I look at this and say, no, there's a gap there, I think it's going to get filled, and I think it's going to do it in a certain amount of time, perhaps, then I have an idea, right? That's how I would do it. Would this have been a predictive way of looking at potentially the top? Yeah. Now you might say, well, you knew that because you began with the end in mind. Yeah, but the same thing applied back here. If I went down, right, and I pushed low, and I saw that U shape, but I didn't know how low it was going to go, and I thought, okay, maybe I don't have this arc yet, but I thought, all right, it built a top there. Maybe there's an indication that this might be an arc, but I don't see it yet. Even in that, you don't have to have the arc. Even just using the top, assuming that that's a level of importance, which you can, it's not always going to be a 50-50, but the point is like, you're looking here, oh, maybe it's going to come back up and try to fill that gap. So let's say, for example, you're here, and you're trying to think like, well, how far down is it going to go if it pushes back down? Like that's just the first auto reaction or whatever. It's creating like a bottom. Where's it going to go? Excuse me. I would probably take the gap level. I would go to the white level here. And I would probably say, all right, it has to come all the way back down to the floor. Because it came up 50% of that when it bounced. What if it didn't come up 50%, Booksy? Well, if it came up to here, right, and I don't have that red line, then I'm kind of out in a bad position because I'd have to then look at this and say, well, I think it has to come really low. You know, now that's debatable. Is that a good methodology? No. The good news is we don't have to worry about that because we have the information already. We don't need to guess. But the same thing applies. So the reactive moves. And this is what really amazes me about this, is that even in the final build out, it's amazing to me, even in the final build out, this methodology works, even in January, which is insane. It doesn't make any sense to me why that should work unless the operators already had in mind that they were going to be pushing it pretty high. You guys, I don't know what else to say. I think that it really was this right here that determined it. So what I mean is that, like, had it gone, let's say it had gone shallower, like let's say this had only gone to here, right? I think what would have happened is that when it took off, it probably wouldn't have gone as high. It would have only gone like right to there. Does that make sense? I genuinely think that's the case. I think this extra little push down gives it the extra little push up. And we see that evidenced all over the place. We did a thing like a while back on springs and how you see that the distance that the spring goes low is the distance the SOS goes high, almost exactly. So if that's the case, and what we're really seeing is we're really just seeing like a waveform. I mean, it's all pointed, so maybe it looks less like a wave to you. But if you really just see this as like, oh, it's just a wave that's kind of traveling across another wave, and you don't worry too much about, it's very simple. And think about it as like I'm driving the price away in order to then drive the price back through, right? And each drive away is also a drive through. That makes sense. It makes sense to me because I think about like a moon, like with gravity or something. And it's like hovering against a trend. And as you pull it away, like gravity gets stronger, right? Because like this is a weird analogy, Booksy. Well, I'm trying to think of like a better one, but I guess I don't really have a better analogy. Like a moon and a planet, you know? If the planet was this red line and it's going to continue to move forward, right? And like that's the planet. It's a red planet, it's Mars. And this is a pink planet. It's like the same color. But if it were like you know what I mean? You get what I'm saying? It's like as you're pulling away, they're tracking together, and like gravity acts upon it stronger here, the distancing, right? And it makes sense to me because then you get to stuff like later on, and it makes perfect sense why when this happened and the moon kind of goes up high, it then like rockets, right? It goes like super fast back down. And you're going to love this, but the animator in me can't resist it. We're going to do like a little animation, bouncing ball kind of thing. So as it builds momentum, it slows out. This is why I think I ended up liking charting so much, because the momentum that's happening is really like the same as like a ball or like gravity acting upon a ball, right? Is you get this kind of slow down at the top, and then it chops for a while there's distribution, and this is just like the nature of a wave. It's in the principle of like everything we do, you know? And then as it goes down, it starts to accelerate rapidly, and you get these nasty big drops, right? And as this is going, you're like, I don't understand how it could be dropping so fast, you know? What's crazy about this is when you get to the bottom, it's not like, in some cases, it's going to just like ease like the others. But then in this case, at least to some degree, I know I'm missing a piece here. You guys are like, it doesn't look like 2020. I know, I'm missing a piece. There's really like a secondary bounce, right? But whatever. You get these high intensity reactions sometimes. And this is true of the top as well. It's like some of you guys are like, well, that's not true. It doesn't slow in. Well, it kind of does on the big picture. Like this is very slow on the top all across. It doesn't do it right here. I suppose that's a bad way to do it because it's like, it really is still pretty quick, right? You get my drift. What's crazy is that it gets to the bottom, it flattens out, and then the next movement is like a rocket, right? It seems to come out of nowhere because it's being held in place for a little while. So everybody's like confused because they're like, well, I don't get it, man. It just came out of nowhere. But really this was like compressing momentum away from, because it hits a wall, instead of just like, and then it just shoots like a rocket. You guys are like, what are you doing, Booksy? So if you want my opinion, and it is an opinion, but if you want my opinion about why I think we do what we do, like this is largely why I think we do what we do. You know? I think it's sort of the laws of supply and demand act a lot like the laws of physics, because you have two opposing forces, right? So you get this massive move to the upside, but it's coming off of like a whip, right? And I had it as squashing like a ball, but you get what I'm saying, because there is like a floor here, right? All right. Cool stuff, Booksy. Thanks for the doodles. You're welcome. But I wonder if we drew it like a ball with gravity, instead of like price action, we think about price action, you know? And what's funny is that there's not much acceleration on this bigger ball until like, kind of like in like the middle here. It's like the fastest section of like movement, maybe in the middle. And then there's like a lot of really slow churn on the bottom. Everything is like closer together. It's boring. It doesn't really start accelerating until like the very end. It's kind of incredible. It really is. So it makes sense to me when I see stuff like this and I look back and I'm like, yeah, I get it. So it's like whipping around that, like a magnetic or a gravitational field here. And you're pulling away and then slingshotting through that arc. And I find this to be very comforting. You might not. You might be like, what the heck am I looking at? It's like a frame by frame for a bouncing ball, basically. It's like animation 101. If you want to learn how to animate, start with a bouncing ball. Super easy. Super easy, but very difficult to make it look right at the same time. So yeah, that was just an example. So when I looked at this, I did the same thing. And here's what drew me to this 869 finally as like the answer. Because like, yeah, that's pretty cool, Booksy. It's got that 50-50 up to 630. It's got the bigger 50-50 from the SOS to 869. But what about where is it going to go later? That question of like, well, how does it travel there? Where does it go later? Easy question. Because we have a gap in the same spot. So what I did is I went back, I mean, almost exactly the same spot, right? If you look at where the gap up is, it's like pretty much identical. So to what happened back in 2020. So what I did is I took earnings and I looked at where was most likely backwards, and this clicked. It just clicks immediately. It's right there. Like, you don't have to believe it, but the math is perfect. It's almost unbelievably perfect. If you look at 292 and 869, and you look at where the center of that marker is, this is why I said I'm going to blow your mind. It wasn't about doing the center marker is at 505. It's the same center marker that we have over here. It's the liquid center marker, basically. And it crosses the red line at the right time, so on and so forth. Well, there's got to be another way. There has to be. Yeah, there's probably a dozen of different paths that it could take, right? But if we look at like the bare bones structure of this and what is highly probable, what is most likely to have happened, to me, this is like a no-brainer. I don't look at the numbers lightly. I look at them like they're purposeful. Somebody's got a plan in mind. They're trying to execute that plan. It's not random. There are places where like you can't anticipate. You don't know for sure if it's going to break a level or not. That you can't do anything about. You just have to wait. That's what I was saying earlier. It's not always like a perfect answer. But this is darn near as close to perfect as I've ever seen. Could you be off with the arc, Booksy? What if it's not that high? What if the arc is actually down here? Wouldn't that mean that you're off by a little bit? Yeah. But all that means is that this drops lower, right? Potentially. Like, that's all it really means. Like, what if it's higher? What if the arc's up here? I don't think it is. But if it's higher, then it goes higher, right? So how do you know for sure? At the end of the day, one of the things that I tried to do is I tried to determine where that arc should be in terms of the middle. I did copy paste it from here, but what's important to note is that this is essentially like a common 50-50 move. I think part of the setup for this whole thing when we came down, I should say, or the market came down in August, or in when we came down in the COVID March drop, was creating that first anchor. Like, we created a lot of things here. We created like basically a top, we created a middle for the range, and then we also created a bottom. Okay, so one of the things that we would look at is like, well, how do you know that that's the 50-50 mark how do you know that's where it is? And it's because of the 50. I think it's because of the 50-50 mark. I don't think there's a better way to do it. Maybe we could guess with something else, but to me, like, that seemed the most common sense way to do this. So what I did is I looked at it, and it's not any different. it's the same kind of general idea here that we have before. So there's a couple ways to do it, but one of the things I was looking at was this marker, and ultimately, like, there's a lot of drop-ins you could pick. It gets a little complicated. Yeah, and it's essentially like the same marker here. So when you go from top to bottom, maybe we could use this top. It'd be slightly higher. It'd be at like 520 instead of 505. There's really only two options. There's like 505 and 520. So if that's the case, and 505 or 520 is kind of like the middle marker, then this has to be either right on it, right? In which case, all right, well, maybe it doesn't go down that low, or cutting through the bottom of this range. So I only can see like one of two possibilities personally. Again, I'll go through this over and over again, and I'll look at it as much as I can before everything happens, while everything's happening. I don't want it to be like blindsided all of a sudden by some kind of a anomaly, you know, like, oh, it wasn't doing that, it did this. If that's the arc, then we're having some problems. We're like beneath it, right? But if that's the arc, that could be an argument for other things. Like, it could be an argument that, well, when we come back down, we don't need to 50-50 through, you know, that low. The problem is that this arc doesn't meet the middle. It's sort of like, let me back up like 2 words or 3 words here. So what I was saying is that, like, in 2020, that middle is right on the dot. In this particular example, in this section, you really have one area that could be thought of as like, maybe it's the center from top to bottom. And that area is right here from like 505 up to 520. It's a highly contentious area. I think we'd all agree with that. I don't think there's a lot of debate about it. It definitely would be something that everyone would look at and say, yeah. The issue is that this arc doesn't actually pass through, like, the price action doesn't pass through it, I should say, not the arc. The price action, that's why I was trying to back my words up, doesn't pass through it in the same way it did in 2020. And so if you look at the price action in 2020, there's a lot of movement through that as a 50-50, and then it camps on it, and the interaction is really clear with these tops. Not so here. Like, there is no top interaction back here. If this is the arc and it's the higher one, there's no top interaction. There is interaction to some degree here. And I would suggest that if I could make this like a Bezier curve that I could stretch, I'm guessing that this could stretch out and this curve could be a little wider here, and it would probably fulfill all of everything that we're looking at, right? So when I did it, it's like, yeah, I mean, like, technically that's more right, but then this doesn't interact. So I just kind of picked what I felt was the best, that kind of satisfies the most requirements. And that's why I went with the bottom of the range instead of the top here. If that makes sense. Hopefully you guys see what I did there and why I didn't use this. I think it's there. You look back at this gap, you can even see right there, like, the drop through. I must have moved this because that was like right on the money before. Whatever. Yeah, you can see the drop through. I mean, there's a lot of interesting things that we could look at there. And then the idea of breaking out and coming back through. These could have interactions that are played with. I digress. Point being, I think we're generally right about where that arc is. And then I think that on the whole, it's still more likely it's 505 and not 520. But even still, when I do a 50-50, I'm going to be looking at that liquid, not just the arc. So, because again, in 2020, the arc is imperfect. It's close to perfect at times, but like right here, it's not perfect. If you had done it to the arc, it would have got it wrong. Really, it's the that center liquid region right here that ends up driving the price through, right? And then later on, something similar happens where there's a pushback up. You kind of meet that same criteria again. And I went through and I'm kind of walking through this chart that I did when I wasn't on stream yesterday. There's not much else to talk about. It's 449 price-wise, and it's probably not going to go anywhere because of max pain at 450, unless something crazy happens, which would be nice. So after that, I was like, all right. So basically, this is pretty airtight for the most part in terms of that movement. But then what? What about the bottom? This part I haven't worked out all the way yet. But what I surmise is that you'd probably come back up to 505. So you'd come back and revisit that level again. It makes sense. This was kind of barred off. Technically, in 2020, it actually came up above the left side quite a bit. The other argument you could make is maybe if it doesn't go as low or if it gap filled, it is possible, and I'm not beyond this. I think it's possible that this could actually come back up to like 6. And if it did that, maybe this has like a LPS instead. Like it just fills that first gap and then has an LPS. That's possible too. I don't want to make it sound like it has to be this exact way, because there's a couple of variations that could happen at the end. I don't take it for granted that it's going to do a spring. It may have a LPS, okay? But the nature of it would be simple. If both gaps fill, and there's 2 gaps here, by the way, if both gaps fill all at once, maybe it's okay. Maybe we don't come back down. It's possible. You know, if we spend a little bit of time between 272, 292, and we come back up and we come really high above to like 6, big reaction or something, that's fine. Maybe we get an LPS and we go from there. However, for the most part, I've been thinking this more in terms of like a spring. So what I looked at was the cycle year over year. So if you look at where we were in March, which would have been the Q2, that's where a lot of the institutions will pick their winners and losers, and so they tend to sell off a lot. Year over year, if you were going to say like, hey, they want to come back to a particular place each year, you could argue like quarter to quarter, but if you were just trying to go sideways in a range and you were going to decide if you were going to hold something or not hold it, you probably come back to 450. So I have a suspicion that when it comes time to it, when we get to March of next year, that we're going to be around the 450s again, which kind of bums me out because I obviously wanted it to go a lot sooner. But I have a sneaking suspicion that's what's going to happen. And what we're going to do is that this 50-50, which does get you to the gap, it's successful in doing that. It's a gap fill and then a big reaction. And the reaction comes back up to this range. It may not go above 432. That's possible as well. When you look at where this is on March 28th at 432 before that big drop, we look at this is on February 28th, which is at the earnings report. It certainly seems very possible to me that it's almost like a mirror image. And I can imagine getting stopped at either price, right? If you look at March 28th, just on the build out alone, definitely seems like it could be there. Maybe it doesn't need to hit it because it didn't hit it here. And, you know, I think there's a lot of ways to kind of look at this and be like picking it apart and saying, Booksy, you're wrong about this, wrong about that. We're not here yet. This is way off in the future as far as I'm concerned. Once this develops a downtrend, you should have an idea of like where that creek jump is. What's probably going to happen is that this is going to develop a downtrend that then has like a 50-50 swing from the gap. So wherever that gap fills on earnings, which is around February 28th or thereabouts, end of February, right here, I think that's where the gap's going to fill. That's my opinion. I think you'll have at that point like a pretty simple trajectory bounce. You know, that 50-50's back up, okay? Swings around this trajectory coming down. After that point, you could probably expect to have a Q2 sell-off where they reposition. And then It builds out really well because if you only fill the first gap, it would make sense to come back up, do the exact same thing, fill out the second, and then continue forward. And then what's kind of lacking here maybe on this arc is the desire to have that 50-50. You might say, well, how low does it have to go? This is debatable. Right now, the problem with the arc is, like I said, it doesn't allow you to take this and bow it down and out more. So what I mean is that Bezier arcs could have like a steeper trajectory in the middle and then a flatter trajectory on the bottom. But these ones don't allow you to do that. So to show you what I mean, I guess I can kind of break it into two so you can see what I'm saying. So this is like a normal arc right here. And then a Bezier can have, it's almost like having extra points on it, but it usually uses like an anchor. So these might look identical. They can actually have like a wider bottom, and it would look smooth, not like a human being's butt or something. I'm trying to make this look better. Human butts. Butts are weird. There you go. It could look like that. Does that make sense? So like part of me thinks that it's more like this than this in our particular situation, because like we were talking about earlier, it's interesting when you move this down, it meets up a lot better. To maybe help with that, we could probably take and get some more guidance from that. We could just take another one and drive it through like this. Or maybe that is the right one, you know, because that one also comes off this top, so who knows. But the point is like you can drive it like that, and you can see that actually meets where it should, as it makes sense. This gives you a different picture of like where it would go perhaps in the event of a spring. So if it came down to, I just estimated 238 or something. I think the bottom is 240. So it's like, okay, let's say it goes to like 238 from here. Where does it go when it breaks out? Well, you can see like the 50-50 around this arc, not the middle here, but the arc is actually up here at like $17. Now, some of you are going to look at that and say, well, of course it's going to be pretty similar because it's a similar setup. Yeah, but notice that it does take you from roughly where the bottom is here all the way back to the green, which is the middle. And that's really what was tested back here, and then ultimately what broke down. It was tested in January, and ultimately what broke down in July of 2023. You get me? So I know I've been going on for a while about this, and some of you are probably wondering about other things, and you want me to answer questions. I wanted to do it today because today I figured it would be relaxed. There's not really any rush. But also to give you a picture of like what I think is a mathematical phenomenon here, really. Like, it's incredible how tight this is. Whether or not this is what happens, can't tell you for sure. You know, we've talked about stuff like this before, like what about an LPS, you know? Because right now, this looks great, Booksy. That's a big run up. Maybe it goes from $2 to $17. It's exactly like what happened in January. It's this amazing thing. But there's nobody saying that that has to happen, right? Because like you said before, it could be an LPS, could be different than it was before. I agree. So in that case, what I would do is I'd look at from the gap fill to here as a possible target, which is a lot lower, because that only takes you up to about 13. Then what I would do is I'd take that secondary move here, check that against it as well, also 13. Probably in the end, we're going to take the pocketed moves and add them together. So we would do like this move here times 2, and then this move here times 2. We'd add the two sections together. Does that make sense? You're like, nope, sure doesn't. So what you would do is you'd take here to here, drive it in half. This is getting really messy, I know. And some of you guys are like, here to here. If you're not listening, don't be mad at me. I'm doing what I can here. And then we take this one, and we would just add these two values together. So it's like taking 50% of one, taking 50% of the next, pull back, and then adding them together. And this probably would give you a similar outcome. I don't know where to drive it from though. Guess there. Pretty similar outcome, perhaps. Right? It just depends. And we can go back later. This is 2215. Right? We can go back later when all of this is all done and look at it later. We're not there yet. But what amazed me about the whole situation was the continuity, I guess. Like, it works really well. It may not be what you and I want in terms of expediency, but it's there. What's even more incredible, and I just kind of went through afterwards and looked at where is this in relationship to everything else. And it is very similar, if not almost identical to 2020. But what really got me was this marker here was very close to where we dropped from in 2023 back in August when we had the reverse split. It starts right there at this wall, if you will, which kind of represents a sort of a low creek down here. It's a low resistance that was hard to break. It really was established way back in 2016, 17 on the tops. When we went up in that big run up, which is like an auto reaction, we checked that line. Like that's where we hit. So when I looked at where does this put you, it puts you above that. Okay, so that's one checkbox. Where else does it put you? Where does it put you horizontally, right? Well, in theory, it puts you horizontally like right underneath and at the bottom. So it puts you horizontally, essentially like a 50-50 around the previous floors at like 11. Okay, so that's also important because, yeah, it puts you in the right spot to potentially break out there. Where else does it put you? Well, interestingly, if you look at the top, I think we talked about this a little before, but if you look at the top there at like 1380s, that goes back to the breakout level. It's like that big gap up, first big level on the January run up. So it's kind of strange because then like the rest of it, it almost looks like left to right. It's almost mirroring what happened in January, but on the second leg. So the second leg almost looks like the same move that happened back here in January, which I think is kind of fascinating in and of itself. When I looked at that, I went back and I said, okay, what about the 50-50 layup value? It has to be sensible. It has to time out right. So I went to, again, like 238. I looked at where the middle was here, because that's the same way you can measure it here. This says 65 now. This one says 1380 now, but it takes you up to a whip around up to $80.30. When I marked it off a little more precisely, I noted that it was taking us back to this top here. So I have a big line going across. And I thought that was pretty interesting too, because if you look at that on the big picture, it's basically taking us right back here to where that top was right around 80 bucks. At this point, it's not much of a top. There's this drop-off level. It has played a really important role. And this is what really got me, guys. Because I looked at all that, I'm like, that's all great. That gives you an adequate move because you need that middle marker here to be halfway from the bottom. You guys are like, well, duh, to that target. But what if that target wasn't important? Why would you come back to that target specifically? This region. This is what kind of got me like finally like, all right, maybe this is, after a long time of kind of talking about very similar things, but not having it like be perfectly nailed down. Because if you went back like 4 or 5 months ago, I was talking about those M shapes here. I just couldn't tell you how I thought they would form. I was very vague. I said, I think it's going to do 1, 2, and then 3, 4 kind of stuff. I was doing like just general M cross stuff, which is fine. Because at the time, we didn't have much build out. And we hadn't had that early reaction yet. There was a lot of stuff that hadn't happened. So early on, that's what I knew would happen. I just kind of know it because that's the way it would happen if it's going to go back up. But we didn't have anything like definite, right? When you look at where you broke down from, just like we do locally right here, and you look at these levels when you break down, We were talking about this yesterday or the day before yesterday. We were talking about those little hook levels when you drop. I talk about the sell-off levels all the time. What are the levels that you hit before you took off to the downside? When you have an arc or an S-curve or a reaction back up, it's going to go back to that level. It's like a really key marker. We did it right here. You know, any kind of major reaction, any kind of S-curve should come back. If I were to do that in this region, there wouldn't be a whole lot that I would look at. I'd look at this one, that one, because that's where that drop kind of initiated. And I'm particularly picking like the level that was used the most often here in the range, not the hard and fast the hard and fast snap level. I would look at this hook, which coincides with the bottom of that range. That makes sense because you'd come back up and test that. And then I would probably look at the top. And the top here is this region here. And this structure as like a cat ear, final cat ear here, that's like is a big one. There's a smaller one right in here. You can see it visually. So this is like a large cat ear. This is a smaller one right here. This structure right here kind of gives you all the information that you need for where you might come back to later on. So when I saw that, I was like, oh yeah. So the triangulation should make sense. I went in here and I looked at this, and these are, I think they were basically symmetrical. Yeah, one was like downward at 36 or something, and the other one was upward. They're close enough. I looked at where it was going to the upside, right? That's this arc. That's fascinating because I took that arc right there and I was like, well, this is actually how I did this. It might look like I did it the opposite way, but I didn't. So, because I want you to know, when I looked at that and I looked at the positioning upward, like where's the direction going? This is the direction I found right here. I took a line, a larger line, and drew it up this way. And I went backwards. I took that same line and went back to the top. I just copied and pasted it. I went back to the top and I just checked it, and it's right there. Like it existed back here as well. Like it was the same marker. It was the very last trajectory that was used before this dropped below that 74, and it was pointing towards the 72 top. So when you look at that in the big picture, it's like, oh, so this was, you know, breaking down and trying to achieve like a similar ramp back up, but it was doing it underneath there and it failed. So I took that into consideration and I was like, well, that makes sense. You can take that a step further and you can drive it backwards here, because you might say, well, what about the last known like move here, you know? Well, that's way out there, right? August 2026. And then the next one up is the very classic February 2026. And then if you go to where that gap is right here, you can see that that's right where I have it in October. It's pretty interesting that it measures out the same. That's all I'm going to say about that. It's pretty interesting. Another interesting thing were the arcs that I've been using here, which is the purple lines. These are the ones I've been using to define what I call like the wave up, down, and then back up. That also meets in the same spot. It's going backwards to like this LPS level. So obviously that's there as well. And it's meeting like the breakdown over here. All of that stuff is just checkboxes, checkboxes, checkboxes. And then we also have these parallels going down. I took that, put the parallel at the top. It also meets there. Checkboxes, checkboxes, checkboxes. Everything would tell me that there's a direct move that's trying to get you to this pocket in this period of time. I might not be right about the exact time frame, but it's or the exact time, meaning like maybe it's not in October 2025, maybe it's later, but the latest is kind of like this pocket out in February 2026, which keeps coming up, right? We've talked about this quite a bit. It's a huge intersection of everything. Triangulations are very, very evident. Okay, so that's where that trajectory came from right here. Was looking backwards and then kind of trying it out. I picked this trajectory right here. I know this is going to seem a little bit biased, but I actually took this trajectory. This is the trajectory from the 2020 run-up, from the bottom point to the top point. And I took it and I applied it and I said, well, if it works, then I'm even more golden. So I went to this point and I said, all right, where's the intersection here of all these points at? It's right there in this little pocket. You're like, why isn't it in the right spot? I don't know. Maybe it's over a little bit. Doesn't really matter to me that much. Could be over a little bit. My point was just to kind of like generally get the idea. I was just kind of dropping stuff on the big macro chart. So I guess I could fix it now that we're here. It's in the wrong spot, Booksy. Well, look, remember, it'd have to work with the 50-50 here. So this has to cross it going into September, has to cross this point right here in order for it to make sense, for it to work symmetric, like sort of one-to-one. It does. Crosses in August, September right here on the wave. And then when you look at where it goes from top to bottom, I didn't do any kind of like percentage move or anything like that, although I think it's probably about the same percentage. Obviously, the percentage would go to this green line because it goes from green to green. I'm not saying it's going to go that low. It could. I'm really looking at the overall trajectory in terms of, does this time out correctly? And it does. It times out to like June, potentially June 3rd or whatever as a bottom here, May 30th. Like I said, doesn't have to necessarily go way below this floor. I think it could probably go just slightly below at 240 and it'd be fine. You know, so on and so forth. We could keep going, right? Point is, when you look at it big picture, is it lining up to be in the right pocket? Yeah. There's a June run up, highly probable, that gets you to where you want to go on this wave. I kept going, man. I just kept going with it. I was like, I'm not satisfied because my guess is that there's plenty of people out there who would disagree and they're not going to maybe put this kind of work into it, but I wanted to try. So I just kept going, guys. I did not stop. I did downward trajectories. I said, there has to be a reason this makes sense. You just saw me put this guy on there. That's the big creek cross here. It matches up to where you would jump the creek right there. In addition to that, I was like, what about these guys? Because this is really fascinating. There's these yellow trajectories that are going down. And I was like, that has to make sense too, because anytime you develop a top on a wave, you develop trajectories towards the opposite side breakout. It should be around the 50% point. When we do this all the time on this channel. You guys hate it probably by now. You're probably sick and tired of it, right? And every time we do it, Booksy can't find the silly sine wave thing. This is what I'm talking about. When you have a wave and you get to the top of a wave, when it rejects, it develops trajectories downward, right? And this points to like the halfway point, and it does this pretty much every single time without fail. And it develops, it's a good habit to develop in looking in terms of like, where do you think this is going to go when it breaks out? What's interesting about this is fairly close to being the exact same trajectory as the original trajectory here. And look at where it is, guys. You take those two, look at that. Give me a break. It's targeting that pocket right here. And so what's amazing about this is that it's actually the same. So it makes it seem like this massive thing should have this massive run up, but it doesn't. It doesn't need to, because it can go for, wow, yeah, it doesn't need to. It just has to go across. This kind of suggests you go even lower, like 180s. You said you weren't going to go to the ones. I don't know. Actually, it should be right there. And it's the same spot, twos. You see that? That's amazing. So that's a 50-50 right around that wave on this top, which is the big one, right? If you're going to jump this wave, it makes perfect sense that you'd reject, come down, push out, and you get a 1, 2. Gosh, if that's not even funny, that's in the right spot. I think that's amazing. That's really, really important. I'm going to make that pink. You guys, this is the messiest chart ever, but I don't care. So I just kept going, man. So I looked at those short-term trajectories. I mapped it out. I did not fudge this. You know, I know that it would make it easy enough to do it, but really it was based on these two tops. It's the top from February 2023 to July of 2023. You can go do it yourself. You don't need me to do it for you. Look at where that intersects this area around $11. All of the breakouts happen here in terms of triangulation. Like there's no other place. It's pretty incredible. It really is. So while I do think that there's always a chance that it doesn't do exactly like what you think it's going to do, this is one of those things that to me was like, what? And I didn't even stop there. I was like, shut up, Booksy. Shut up. But I had to check one more thing, which was these upward parallels. So when I went back and I looked at the overall picture in 2020, there was a lot of upward parallels that moved to the upside this way. And I went and found them, and they're pretty tight here. I mean, you can use a variety of methods to find different ones. I think this is them. Like, I don't want to argue about it. They're these light pink lines. I had done this previously, and I basically came up with the exact same results. And I took those and I decided where are those going to go? And without even really trying, I just kind of took the top one on this structure here. Like that's the breakout. Look at where it ends up right here in December. It ends up at 830, the 834 area. Would it make sense to go above that when we distribute potentially? Yeah. Yep. What about the end result way over here? Where does it go to? Well, it goes up here, and you can see it like visually right there. July 2025. It's in the right spot at the right time. That's the uptrend that we're trying to form right here. Triangulation. Pretty crazy. I've been talking for like an hour and the price hasn't moved. And some folks are gonna be like, well, all that's really cool, but what about right now? The price hasn't moved. I didn't think it would. GME might move a little bit. It's at 2230, which is kind of a weird number. Yesterday, I doodled this out. I had it drawn out higher. So if you remember, I had it drawn out like here. Okay? But just accepting with what we've got, I just pulled it down. I'm like, you know, maybe I just had it off a little bit. I'm human. I could have like a few pennies off. It's not going to kill me. I think it's okay as long as it makes the jumps that it needs to make here. What may change is how much backup is needed, because if it's higher up here, you don't back up as much. It could be on a higher platform versus coming down a little lower, which tells me that max pain again might be in play the week of November, next week, the week of the elections. Max pain might pin it right back down to near 450 region over here. If it makes that jump going into earnings, this is hypothetical, but I think it's reasonable, so bear with me. I think earnings causes a pop to about 480. It's based on a few different things, but I went through and I did a measurement and then I did some trajectory intersections. It seems about right to me. So there's a lot of steeper, there's 1, 2, and then there should be a third right here that's even steeper. It's complicated, but it's based on the waveform idea. Like you're waving up, build a trajectory, come down, and then you meet it again, right? And so you're doing the same thing. You're waving up, you come down, you build a trajectory, you meet it again, so on and so forth to the upside. That's what creates like a parabola. So it's like a steeper and steeper and steeper drive. And what I noted was that you could probably just chill out even going into Monday and then rip it Monday, and you get that wave that you want to get. It still looks like what we wanted it to look like, but then it makes sense that you run it up into earnings, and then earnings dumps it backwards, and then they pin it at like 450 before elections. What if it goes down, Booksy? Well, if it goes down, it goes down. Maybe I was late and it's still going to go down to 4s. I don't know. You know, who cares? Point is, at this point, like we know what we want to see. Whether we see it or not, I can't control. All right. But this would make a lot of sense to me in terms of like the overall movement. So pumping it up into earnings, keeping it right below that 485 mark, then driving it back down, pinning it through elections at 450. So you basically haven't gone anywhere, right? So we're just kind of chilling out down here. And then after elections, you get the big pump and or the big dump, I guess, depending on which way the market goes. But if you get the big pump, I think it's just going to go right up to the 618 to 630 region. I should just say 620 to 630 because I think that's where it's going to be. And that would be your SOS. And then after that, probably takes another week. I can imagine, again, them maybe pinning it at 6 the week of the 15th. Because if we were there, we might as well just stop there, right? It just makes sense to me. So I have a lot of quiet confidence that the numbers that I picked are probably right. Based on where I think it maybe hits the top, this is a little more tricky. I did some trajectory stuff, and what I did is, this is kind of backwards maybe, but I don't normally do it like this. But I thought about where would you need to be based on this other idea that I just showed you. We just talked about it for like an hour. Where would you need to be if you were going to try to get down and fill that gap in like March, right? Like where would you need to be? If you fill that first gap and it happens here around the February 28th mark, what trajectory would you have to get you to either 840 or 836? Now, the problem with this is that trajectories can be modified. If there's a bounce in the middle, and there might be here, that trajectory might actually be moved to the side. Like you could still have kind of a late rally in the end of the year and shift that trajectory over. So there's some issues with the presumption that you could kind of measure it backwards, because it's like, I'm not an idiot. Like I recognize there are some issues with that. Namely that you don't know for a fact the trajectory is going to follow the whole way. That does happen, that it follows immediately and then it goes off and then it could even go steeper. It could be like a rounded bottom or something. There's all kinds of weird stuff that happens. But we don't have a lot here to go off of. So we're going to have to kind of make some leaps in terms of like our thinking. So one of the things I looked at was some trajectory ideas about where I think we might go. And I did this a couple different ways, but if we go to like the 860s, for example, I had us kind of going a little too slow. It didn't quite work. It made almost more sense then to use 13s, because if you go to 13s, the trajectory is a lot steeper. It's a little more reasonable, you know, things like that. So what I've concluded is, and you guys are like, well, that doesn't tell me anything. Concluded is you don't know. What I've concluded is that probably, I think Q1 being expected maybe to be weaker, perhaps, things like that, coming around the corner. I'm looking at a trajectory that like kind of makes it, so instead of like changing the outcome, I'm trying to like make my words work for me here, and I'm stumbling on them. So instead of changing the first point, you change the second point. Because if this is like too wide, that doesn't work. It could be that the trajectory itself isn't the problem. The problem is like, when do you get there? And what I was determining was that it sort of appeared to me that it would be a little bit later, perhaps. So someone had asked me in the Discord group about, it's right there. It's on this marker. I marked it off. And I don't know why I didn't move this stuff over, but I marked it off because I did it on the other chart, and then I just didn't finish on this one. 125. Yeah, so what I did is I kind of looked at the overall picture here and estimated roughly, like, where do I think it would need to go in order to make a successful push up and then back down. It's a simple wave formula. It doesn't mean that it has to hit the high here. It just means that the wave builds out across this middle. And I found that there was like a window, and it was like late November, like around the 20th of November in the 20s, to about December 10th. So there's like a 20-day window here at the top where the trajectories work pretty well in order to get you back down to a gap fill before February. Anything else doesn't really work that well. So if it only goes to the 8, I have 884 here, but I think 869 is the better number. So you see I did it here already. I did the trajectory build out here, and it's built out for like December 18th on this chart. Maybe because of I probably was trying to put it on Monday the 16th. Not the Friday. That a little off. So you can see like the way you build it out, it's not that complicated. If you have the end in mind here, and we kind of do, and if you're just joining or you're just wondering where that came from, it's the gap fill. I just spent an hour talking about why mathematically it's really solid. It is not a happenstance number. 869 is a weird number, I know. It's not the only possibility, but it's one of the strongest, if not the strongest one that I've found. So that's the one I'm using. So as a matter of speaking, like, it doesn't look very fast. You kind of look at that and you're like, well, that's super slow. Booksy, you're saying that it's going to take like a month to get up there? Remember, trajectory is not the same universally as other things. Like, when I look at a trajectory, I could be very loosey-goosey with it. Let me get rid of that one. And it could still potentially be right. You know, like, technically this trajectory could follow with a 50-50 wrap in the middle by just dropping down at the end. Does that make sense? Like, it could be like this. So it's not designed to give you like an exact path, right? It could also be something where this takes longer at the top and then it drops really hard, you know, after January 6th or something. You know, like, we don't know, which means that that trajectory is an estimation of possible up and down and timing, but there could be other inherent trajectories here. So one of the things we might do is look at, okay, well, if it's a longer winded top, maybe the first one was really fast. It's very possible it goes up and it spends more time, and it may trade out this little pocket here, maybe between the range or something, I don't know, up at the 8 or at the 8.6s, 8 whatever. It's definitely a possibility that it just takes longer on the top. So again, I don't want it to be like this is super hard and fast, like Booksy doesn't think it's going to be at the tops till then. It's an average. You guys got to understand, like, averages are averages. This could have a really rapid ascent again in late November, which is kind of what I'm expecting, because I think we're going to rally, and I think we're going to take off going into late November from the 6s. I think we're already going to be up there. We're going to build above 6 and then pretty rapidly move up to the 8s. That's my guess, okay? And then I think from that point forward, you could have a little bit more time spent in December. If the rest of the market is kind of rallying still going into December, AMC doesn't necessarily follow, which would tick a lot of people off. But if it did that, it makes sense to me that it would have that time of distribution, like the will it, won't it stuff, which AMC almost always does. If like IWM is rallying, AMC doesn't want to follow it, it's usually doing all these kind of up thrusts and junk. It's like eating up the volume, right, as it's going, because people think it's going to go and it doesn't go. So it would make sense for me that this could have like a secondary trajectory here that's a lot steeper, right? That could be built out pretty soon. So that's kind of what I was doing here with this. And it may again seem like that's a little bit irrelevant, or it doesn't quite work, or whatever. It doesn't matter. And some of that is built upon, some of that trajectory, you guys are like, what do you mean it doesn't matter? It's built upon what we were talking about a long time ago, not a long time ago, but a few weeks ago. When we were talking about 13s, there was a pocket here that's kind of undeniable, right? And it reminded me a little bit of like this, where you have like, there's a possibility, right, that this goes back up and meets those early trajectories, right? It does have that kind of appearance in the terms of the timing, but it doesn't go as far. It gets stopped. And it's a similar concept like here. So you're still following, like, that trajectory might be valid. Some of those early ones that we were getting for those 13 marks, they could be very, very valid and not hit. So part of me thinks that might be what's going on to some degree. That like there's an inner wave here that could be trying to go back up to near the 13s. It could hit, but if it doesn't, I think that trajectory is still valid, you know? So when we went back and we looked at these things, I think it was like in November or something, these are really steep trajectories is what I'm trying to get at. So I left it on the chart yesterday, and I was looking at it in relation to the bottom that we're in now. It's a little bit of a stretch here, but this one is, I think, not really something I care that much about. What this gives me is like a little bit of a guidepost for maybe the direction we may go in terms of timing. So I had drawn out this bottom. I started looking at these trajectories, and I'm like, it's kind of working. It makes sense you would accelerate. We'll be able to correct this soon if it jumps over. But what I would expect is that there would be a downward move here that could drop this marker by maybe about 50-50, potentially going into next week. If it breaks out earlier, guys. I'll fix it, okay? Maybe this timing is a little off. It happened in May. I did this big thing with timing, and then it ended up just shooting straight up to the top. So you never know. And I was wrong. But I got the price target right, but I got the timing way, way wrong because it was really early. But what makes sense to me is that this goes down Monday and then comes back up Tuesday, Wednesday, rallies. So it comes off of 450s and then maybe drops one more time. You know, staring at it now, it's like, who knows, Booksy? Maybe this is farther over. This comes up high going into Monday and then drops, holds, and then drops on, you know, the after hours call or whatever. It almost inconsequential, but I get why folks might be like really eager to know. This is just my best estimation. So that's kind of where I'm at right now, is I figured it might meet up with this trajectory and go. Doesn't necessarily have to come super low. I had said 444. It dipped below 444. It makes me think that there's a decent chance anyways that this could still come back down one more time to try to test that bottom. I don't think it's a big breakdown or anything necessarily. Part of me looks at this, I'm like, oh, it's a cat ear hook. It would just die. But another part of me just thinks it's a wave. Like it's just waving through here, and it's like a 50-50 slide. And I don't feel like it's that far. So when you look at it as a 50-50, it could go to like 438. If you go to the lower portion where it hit that second support, it would be like 433. And on the big picture, those don't really give me a huge breakdown. It looks like a backup to retest 436 in the end. So that's kind of what I landed on and why I put that at 436. It was for that reason. So I thought today we would bounce up, maybe get to 450. We went pretty high. And we actually checked this level again, which I'm not a huge fan of. This goes way back. I don't really want it to like hard reject off of it, but they may need it for selling or something. So yeah, anyways, my anticipation here is that it probably goes down to about the 430s and checks those levels. Even though, yeah, I said 444, I know I did. It's really wrapping it. I'm not really sure it's going to hold. So you catch my drift. So yeah, that's kind of what I think is going to happen on Monday. I think we're going to maybe become low first. We might even start picking up on Monday. It could be a bit of a volatile morning and then drop and then go. Should break if it's going to go both these creeks locally. Be pretty easy to do. 1-1, chop. And then Tuesday, maybe breaks out again here. So this is like the halfway point of the bigger move. That's another thing that gets me is like these trajectories meet up about halfway up. They're really well positioned as like stopping points. The intersection here is really well positioned. It's an intersection of a lot of different things in this pocket. And if you drive it away from the price that you want to get to, you go down to like the 430s again. So decent chance that that's what happens there. And then you come back down probably late or maybe at that spot. I think it'll be up top for a little longer, but we'll see. And I think you throw back to the middle. And this is why I think it makes sense. We might come right back down to 4.5. And I wouldn't be surprised if it's going to run. I would not be surprised if it was at like 460 or something instead. Like it teases out, dropping to 4.5, and then it actually goes up to like 460. And when I looked back at the trend that was just established, this little green guy here, that makes a lot of sense to me. Either on top of it or right below it. It could be, again, indication of bullish nature. Just sit on that. It's really in the right spot. Again, triangulation of 1, 2, 3, 4 markers going into the Friday, November 8th region. Blitz. So maybe as low as 430s would be okay. Ramping up going into Wednesday next week near 480s. And then coming back down to 450s by Friday for elections. Should be a green week, but I think it won't be like super green. Like, because it'll just be like a 1-2, like a big double flush. Yeah, it may have a little more of a wick to the bottom, which is good. But if the week starts at like 450 and it ends at like 460, the weekly is going to look like a lot of wick, right? It's going to have a lot of wicks on it. That's okay. I'm sure there's other things going on right here. I haven't looked at every little thing. There was a question about RSI, and I don't really want to answer the question because the question was about RSI as it relates to what happened back here. And the question was from someone in the Discord who's sometimes very contrary, but not in a mean way. I didn't take it in a bad way. They basically were comparing it to this little region right here. There's a lot of similarities. So it's important to like recognize there's a lot of similarities. One of the things that stands out to me about the similarities is the nature of this breakout at the end, kind of head faking and then diving. And it would not surprise me if that's what happens here. Like it pushes up, and they had actually said 480s or something. I think they've got a decent picture of what's maybe going on. Because they were thinking like, oh, it pushes up and then it comes back and then it just dumps. Well, yeah, I mean, if elections causes a dump, election causes a dump. I don't know if it's going to be that impactful or not. I really don't. So I could totally see where that's coming from. But in order for me to make a more valid case, I think personally, and I said this before, I think 505 still is a stronger level to knock down from. So it's not impossible by any means that it stops short of that, but I think it has to have an up thrust before it comes down. So there is bearish possibility here. You know, if you see it pump up and then it dives beneath 450 and starts sliding, I personally would just have to read it as it is. It's distributive. Like it has a head fake and it comes down. so be it. And that's sort of what we see back here. But they had questioned the RSI because they were saying, well, it comes, if you look at like at the 1 hour or 1 day, really it goes daily up to like down to like an hour or something. If you look at RSI, it's a little bearish looking right now. But it's only bearish because it hasn't made a higher push yet. It could very well not end up being super bearish. So one of the things they were pointing out was this. So there's clearly a bearish, almost a hidden bearish divergence of sorts. It's pushing up higher, right? And then it's coming, the price is not breaking out. So it's like reaching high. It's getting really overbought compared to where it was maybe back in September, but it's doing it at a lower price. That looks bearish, right? Right. So what I said was that, and I agree, that could be bearish. What I was suggesting is I don't really think that's the most important thing. Like I just laid out to you what I think would be a game plan for distribution here. So coming up high on a rally and then dropping it low. I think that requires it to pump all the way to the top to successfully get that drop. If you drop from here down, I don't necessarily think it goes all the way. We could debate that, but I also feel like it makes perfect sense to go ahead and run it up, get that pump, and then drop it down after the fact, right? So on and so forth. So when I looked at the big picture, I was like, yeah, I could see where they're coming from, why they would see they look pretty similar, definitely have a similar vibe to them. There's parts of it that are similar for sure. You know, it looks like it's going to maybe not go, so on and so forth. However, what's important to note here is that while it's true that something like that can happen, it can cause like a divergence that then breaks down. This did happen right here, and it did break down. But when you look at the big picture, and this is a very small area, when you look at the big picture, this whole pocket here, right, actually has like a similar kind of vibe from the points of breakdown here to what happened here. So the problem is that like I could look at something like this and make the same argument back here that this is bearish because it came down low, it came back up, and it's pushing the RSI up too fast. Because you didn't, well, like at least when it first pushed up, you didn't necessarily know it was going to keep going. I mean, I thought it would, but there's other reasons for that. But just looking at this like big picture, you probably make that same argument this way. You know, like there's elements of this that are similar that do give me a vibe of like, man, that could definitely just rug pull and drop. This is an LSPY, it just dumps. I think it has to make a pump first. I think it would have to pump up first. That's my opinion. But I could see why someone would say, yeah, I think it's very possible it goes the other way. The problem is it's an incomplete analysis. Like, and even in the end, this would be like a, I don't know, like a hidden, sort of like a hidden bearish. I'd have to look at my cheat sheet. It just doesn't look like the RSI wasn't letting up, you know. There's other things going on here, right? We know that there's like a support being built here, so on and so forth. I was kind of like curious. I was like, yeah, I could see why. You know, it has a similar vibe. I definitely don't disagree that it could be bearish. That's a silly thing to disagree with. And you need to be aware like where that could happen. So could it happen right here? Yeah. I mean, I don't think there's enough time between earnings and elections for anything too crazy. I think they're going to try to kind of keep them together. But it's worth noting that like get to where they want to get to and then pull the trigger all at once. But it's worth noting that, sure, like there could be a giant rug pull. He might announce a share offering or something, you know? Like I can't predict that. There's too many things. It's too many elements. There's certainly things there that like I couldn't predict. But I'll say this, what seems likely to me is if you have a head fake, 485 to 505 is the most likely place it's going to go. then it would have to break back through the creek at like the 450s. It'd have to drop low, start making lower lows. Probably 436 is your stop loss for all that stuff. It got really bad. And that's about as far as I take it. The idea of a divergence is complicated. Divergences are very real things. They can be very, very powerful tools to help determine the direction of a stock, up and down. So he's not wrong that that's a little bearish. But what I said to him yesterday was that I thought that it probably is going to chill out a bit here. And I think if it relaxes over the next couple of days, we get like some shakeout stuff. I think this is going to end up being mostly sideways into elections, which are like right here. And part of me wonders if we don't end up, on the daily anyways, coming and meeting our friend, the moving average here. And that's really where we see whether or not it's going to ultimately go. Like, I think it'll probably meet up there and be a little bit of a cliffhanger. When I went to the weekly, very different picture, because on the weekly, that comparison that I just drew couldn't really be made here at all. It's a much different setup, right? But notice how far that RSI has come back down already on the weekly. And there's absolutely a moment here of possibility, right? You can see it as a distribution here as a breakdown. That already happened. Now we're coming back up. Some of you guys are like, it looks like a hook. Well, it could be. But this chart is not, RSI is not a leading indicator, right? It follows price action. Can it help you to interpret some things? Yes, it can. All right, the space between the 2020 middle, if you will, the squishy middle that happened that we were talking about earlier is right here. I mean, it passed below it. It ultimately has a moment where it comes back up and retests it, you know, and then it continued, right? And we're in a pretty similar spot. If you look at where we are on the weekly, it's not like radically different in terms of weekly RSI. You can see right where it is. It's a really similar location. It's definitely a possibility that we make that, we hold it and we push out and we do a secondary push here. Right? And then when we come back down, much like what happened here, where there is a divergence, right, to some degree, but in this particular case, when we come back down, if that does what we think it's going to do, it goes up and then it comes back. All it's got to do is clock like a week or two up top, you know. Imagine then this comes back down and it doesn't ultimately go all the way back down to the bottom, but you make a lower low. Then you have a year-long, March to March, you have a year-long divergence, April to April, right? May to May. You're looking at it right now. Like, it becomes a massive bullish divergence, which is what happened here, essentially, like all the same. So I find it to be a bit analogous to that, and it doesn't really feel like it can't be the only thing you look at. Like, if you only look at RSI, occasionally, yeah, you're going to get it right, but there's so many other things to look at, you know. Volume is another one, and I just don't see that kind of, I just don't see it as like a highly volatile distribution, but I get where people are scared and they're like, I don't know, man. So you see those signs and you're like, it's going to dump, and you know, you could be right, but the reality is that for a long time it's already had that possibility. We're just pointing it out again, you know. And if you don't think that's a possibility, then probably good to check yourself and remember that that's a possibility. I looked also at the MACD. That's the, and I checked it out on a couple things. Oh, what is this? This is on balance volume. That's not the one. Well, I'll add it back because I think it's on the other chart, but MACD is a little interesting because it's like a double-edged sword. So on the daily, the MACD, to me anyways, looks like not as good. Now I'm kind of stretching it out because I want to show you the price action here. This is what happened in 2020 on your MACD indicator. We know what visually it looks like. This is what's kind of been happening now. So if you go back even further, I had already done this illustration in the past, but there's another move here that's actually a larger divergence, because this is coming down from 2017 top, and this one is coming down from March of 2022, right? Huge move right there in March 2022 in terms of like selling. And ultimately, we talk about BlackRock selling off and junk. That's part of that distribution. And yeah, I mean, it's a long road back, as you can tell. Well, all of that to say, there is a long-term move that's pretty similar right now. It looks like it's building out, much like we did to some degree in, I'm going to use the orange lines, much like we did to some degree in 2020, right? I mean, kind of. Certainly looks like that, like it's building up towards it. On the weekly, there's not really any indication that anything's completely wrong here. Like, I went and looked at what happened back here, and it's a lot more irregular. Like, there's a lot of bizarre, that's because of COVID probably. It just looks like the chart. I mean, that's genuinely what I think it looks like. It just kind of looks like the chart right there. Like, there's no, it's just like that M shape is all really clear on the volume and junk and the divergence, convergence stuff. I find that the current range doesn't really doesn't look like that. You can see the massive push here before the lows, right? That caused this big reaction. I have a lot I could say about it, but the point is, like, it's not really one-to-one, so you can't do like a strong enough comparison on the weekly. When I looked at this on the weekly, I zoomed in as far as I could. It does to me look like it's pointing back up just slightly, but it's like really compressed. I don't know if they're going to try to push it over zero on the weekly in a move, so there's not really much else to say because right now it doesn't really have any kind of glaring problems on the weekly time frame. The daily was a little different. The daily has some issues because on the daily time frame, it looks bullish right now. Like, it looks like there's definitely some kind of a buy-in, perhaps. Maybe like we haven't seen in a while. You can see the volume pickup's pretty decent, at least on this it is. And when I look at this, I'm like, okay, that looks good. But then it looks like it broke out from this downtrend. That looks really bullish to me, right? Like, oh, there was a creek and now it's, it jumped it and we're going to continue, right? Well, maybe. It may need to come back and retest it, but like we would see that later. The reason that I'm a little bit like unsure here, where I'm not unsure on the weekly, is because I can't find that same divergence very easily on the daily. You have to zoom like way out, and you can kind of visually see it there going back to 2020, but it looks more like a narrowing. So when you zoom in to see more locally what's going on, this is where I'm trying to move through this pretty quick, but this is where I'm not sure. To me, it looks like this walk down was a crossover on the MACD wave. You see that? So what makes me a little bit nervous about this is it vibes a little bit more with, like, again, maybe a distributive element to it. But I think that's okay. It's just that when I look at that, I'm like, oh, it lost the trend. Like, that's what I would probably be looking at. Oh, it lost the trend. Well, it did. But maybe that's okay, because if I think that it's going to pop and hit 8 and then drop, that would make sense. And then maybe at this point, it does go lower. Maybe it has divergence or whatever, right? I don't know. Not there yet. But sure, like, is it possible that could happen? Yeah. I wouldn't really be looking for a divergence here, though. I'd probably be looking for it on this bottom, like backwards further. So, like, I already know that that trend is lost. And I think on the daily, I think it's going to represent not as a breakout, but as a knockdown. See that? Like a second cat ear. Like ear one, middle wave, ear two. Some might say that ear two could already be happening. It's just really weak. Yeah, it could. But I would expect it to come back up and check this on the push-up. And then probably knock back down. And at this point, I'm now looking at this low. So if it can come down here and it doesn't ever make another low, price action wise, or excuse me, it makes a lower low price action wise, but on the MACD it stays higher, then we might have a bullish divergence here as well. Maybe. We're not there yet. Hopefully you catch my drift though. Catch what I'm throwing at you? Okay. So there's always a fear in a lot of people's minds about a breakdown or things like that happening. I'm not sitting here really even advocating like a run that goes straight up to 80. I'm talking about a year plus long move set that builds out that way, right? And at the end of the day, when we go back and look at this, a lot of this stuff isn't really changing too much. It's kind of just getting more narrowed in, like more dialed in, I guess. But the overall picture is pretty straightforward. It really is. And I think a lot of it just has to do with your outlook on things like selling. Like you think that there's enough people here to sell already, then maybe we don't need this big upthrust, you know? And it really is a question of supply and demand at that point. I think they need to alleviate it in order to come back down. And I made a huge argument for that earlier today. So this is what I thought would happen on GME. This is what's happening on GME. So I'm not going to sit here and dawdle about it too much more. I don't know how this plays into exactly what's happening on AMC, but I literally haven't changed my chart from like 2 days ago. I didn't even look at it yesterday. This is exactly what I had because it was going to go to this level and then probably sell off and come back down to the top here. If it doesn't hold the top, it's going to come back down and try for the gap. It could do that very, very rapidly. Maybe if there's a sell-off Thursday, that starts a sell-off because of AMC. You guys are like, well, GME doesn't move because of AMC. I know, but if it works, you know? So if it ain't broke, maybe there's a reason that this is where it is here, right around the AMC earnings stuff. It's a really nice 1, 2, 3, 4, 5. It's a cat ear where you get ear 1, ear 2. It's a sine wave. It's all really quite nice. I think you could make an argument that it could be coming all the way back down to retest 2010, retest the creek jump here that it didn't check on the way out. It kind of just blazed through it. Would it make some people upset? Yeah. Would it make us upset? No. Because we probably would be like, sure, that could happen. I think it's possible. So this is what I was thinking. So that maybe around 2050 again on November 8th, just AMC's at 450, GME's at 2050. If it goes the other way, guys, it goes the other way. I'm not going to sit here and debate it, but I think it'd be a bit weird. So one of the things I'm not sure about is Monday, if you get a sell down and then you pump into Wednesday, what would that maybe look like here? I don't know, you know. I think it's going to depend a lot on whether or not this level breaks anyways. And if it does, actually kind of right where we're at right now, yeah, see that little lip? That should be the resistance. It's probably where it would be on Wednesday. They just wouldn't buy as much. But, you know, if it ends up reversing and going up, I couldn't tell you. Maybe at that point we have to do something else if it goes this way, okay? It's really straightforward on GME. It's already made the creek jump. It needs to come back and check it. I think it's going to do it into elections. I don't know why I have this so slow, but I think after that, it's very possible. This just like moonshots and goes up to the 30s. 2988, thereabouts. It's got to stop a little bit here in the 24 region. But other than that, we should be moving back up towards like SOS range around $29 to $30. That's where I'd want to see it at first. You guys are like, that's not SOS. It's like way up high. Why doesn't it go all the way up here to like $40, $50? It's the same thing as AMC. There's a possibility that it goes beyond. I don't have a lot of expectations that go well beyond $47. If it goes that high, I'd probably be pretty happy with it. A lot of it has to do with where I think we've developed trading patterns that suggest that you may not come above this mark here, right around 35. And the longer it went on, the more we were able to look at that, and there was just a lot there. It's still the same levels. Because on the macro, those are really critical points on like the bigger uptrends. So part of me thinks that it's going to be a distribution effort going into November, December, just like AMC, and then potentially come back. I think if it goes high, there is a possibility that it could go back up to that 50% mark on the big picture or thereabouts. That's up here around 90, back down to like $50. I'm pretty skeptical about that. It looks like I have it just kind of rocketing, but to be honest, like I don't know if that's very valid. So yeah, I've not being bearish on it. It's still big moves. But if AMC does go to 8 and GME goes up here, I mean, that's a 300% move. That's a pretty stark difference. If AMC only moves to 8 from the floor, it's 114%. So typically the percentages have been somewhat comparable. So I could see it going to like 50, like 47. That's 120%. More readily than I could see it going all the way up to like 80 again. That was more like if AMC goes to 13 kind of thing. So if we're going to have similar levels, that's what I would pick. I'd pick this pocket right here from like 35 to 43. That's like the $8 region for AMC. And then I'd pick a pocket up here high around 85, maybe the 13 level. But frankly, I think a lot of people are going to be selling as soon as it hits 40. That wall is very clear on AMC, and it goes way back in time. So I would be a little surprised if it did hold it, but you know, in a good way. I wouldn't be like mad, I'd just be surprised. So it'd be really funny if I was talking this whole time and the stream wasn't streaming. Do the algos constantly test support resistance levels? Yeah, because institutions, that's how they trade liquidity. Before computers, there was just price levels where you could buy or sell. And imagine if you're in a room with a lot of people, just for example, Wall Street, right? The epicenter of it. If you're in a room with a lot of people trading, if nobody wants shares, let's just put a stupid example out there. I'm just going to pick some numbers. Or not stupid, but just an example. Let's say you're trading between 10 and 20 regularly. Well, if you keep trading at 10 and you can find people that are willing to give you shares and then you knock the price down to 10 where you can buy, you're going to do that by going up higher, right? We know that there's a lot of sellers up at 20. We can just keep getting it back to 20. People will sell a lot, the price drops, demand drops, right? And then I can buy at like lower prices. So when they were doing this, they would be charting out those levels where you've got frequent trading. You're able to trade a lot more money. Liquidity moves the markets. So like the market moves to wherever the high liquidity is, right? So if you can find sellers by going back to previous resistance levels, or you can find buyers by going back to previous support levels, that's what you're going to do. Nowadays, we have the bid and the ask, and we see it all on like level 2. We have computerized trading that's got mathematical formulas in there to try to help maximize profits in terms of how they rotate through those shares and whatnot and what they're doing with them. It's mostly still long term though. So like institutions trade long. So they're looking at, if we have these levels that we're checking on the way down, we're going to check them all on the way back. So Stockfather did his first degree, I don't know what he's doing now, but he did a first degree or whatever in finance, and he studied Wyckoff, and that was his specialty. And one of the things they taught him was that you never ignore liquidity levels. Like, it's just not a thing. If you pass through it once, there's a chance you're going to come back to it later. And especially if they spend a very little amount of time there, but there's a good amount of volume, they're probably going to come back, which is part of the reason why I think that coming back down to 2s is not unreasonable. Even though plenty of people have come on this stream and tell me that they don't think that's possible, or they don't think it's going to happen, or this or that. The fact is that there were a lot of buyers down there, you know? So it stands to reason that if you want to accumulate more, you want to try to drive the price back down, you're going to create a massive distribution at the top in the form of a double top to get back down there. While you're doing that, you can go ahead and bring it back to levels that you checked previously, that you want to check again, where the high liquidity is. So if you're in a room full of a bunch of people, you're going to trade those levels until it's no longer reasonable to trade them. Like, if I'm constantly getting able to buy those shares at, let's say, $12, it's harder for me to keep it at $10. I want to buy shares at 10, but it's hard for me to keep it there because people keep buying it up every time it comes low. Again, one thing I can do is initiate a scare tactic, drive the price low so that I can get those shares. This is exactly what happens in distributive action. You see, then they drive the price high, 20, they release bad news or whatever, people freak out and they sell. Well, now I've got a whole bunch of sellers willing to sell me their shares. They're panicking, and I can buy their shares at $10 or even less. Oh, they're driving it down to 8? Oh, they're driving it down to 7? Great. I don't care because I'm not going to be trading my shares for another 2 years. I'm going to buy them at low prices, right? And the people that are freaking out, now they've given me a window of opportunity because I drove the price up and then initiated a sell-off. They're giving me the opportunity to now buy low where I couldn't before. And that's the idea of like marking it down. And then when you mark it back up, it's the same theory, right? It's just in reverse. So you're trying to get people to sell at lower prices a little harder, but you're using those same methods but in a lower range. And at the end of the day, like, what we can't see is we can't see the liquidity, right? So one thing that we don't know, for example, is like range satisfaction. It's a really hard thing for me to do because I don't know. Usually you can tell when the volume's drying out, but guess what? We spent 5 months in the same place. Clearly the volume hadn't dried out. Some folks will say, yeah, it did. It's not trading as high volume as it did on the big push-up. Well, no duh. You think, of course it's not. But if you look at like daily volume being like tens of millions or whatever, that's still a lot of shares trading hands. There's still a lot of people willing to buy in that region and sell in that region. So one of the things that's hard to know is like in that room of traders where they're all kind of like swapping shares, it's hard to know exactly when it's time to move on, like from our point of view, because volume can dip low for different reasons at different times within a range. At the end of the day, that's what Wyckoff tries to do is it tries to interpret what's going on in the range so you can see the phases of trading. So phase B is boring. Why? Because that's where people are just trading the range. There's nothing really that exciting about it. There hasn't been any major moves. It's super slow. It's super boring. Everybody's trading between that 10 and 20 price or whatever. We're just doing that example. When it gets kind of interesting is when you get towards the end of the range in phase C and you're initiating kind of like big sells. Basically, you're trying to entice sellers to kind of buy in so that when you reverse, sellers buy in. Well, you know what I mean, sell in. Short sell it so that when you reverse, they have to buy back. But also, you're trying to shake out as many buyers as you can to get their shares because you want to buy as low as you can now. You realize nobody's trading anymore. Let's say if you were doing 10 to 20, nobody's really trading that middle anymore. At 15, you're just, every time you get there, nobody wants to buy or sell. All right, well, the range, we can move around different parts of it and we can check it out. That's what they do. That's why you have the wiggly stuff that we drew earlier. That's all that's going on. Take out the fancy pants talk and all that junk, and you're just talking about navigating through the range in a way that you're able to test all the areas. Like the reason that this is the way that it is, we talk about like all this fun stuff just to kind of help illustrate like this idea of like gravity or like moving around a wave within a wave. All that stuff is cool, but it doesn't answer the basic question, like what's actually happening. What's actually happening is liquidity trading, right? So like you go back to 2020 and you look at the liquidity, there's a high concentration of liquidity in this shelf here that's built out at 24. And this is testing bottom, testing tops. You're moving through the range in a way where you're spending time in the upper 50%, you're spending time in the lower 50%. And that's one of the ways that you can kind of get tipped off to institutional selling or institutional buying is by looking at where is the most time spent. If more time is spent in the bottom, often that's bad because that means that there's a lot of people selling whenever they try to push it up. There's too many sellers, not enough buyers. If more time is spent in the tops, it actually is usually a good thing because it means there's so many people buying that demand is being kind of propped up, right? That doesn't mean they're not going to try to drive the price back through the floor and scare people into a spring. It just means that there's a lot of buying. So every time it drops low, people are like, no, I want that, right? Because I think it's going to go up. Whereas in selling, every time it goes up high, people are like, I want out. Or I want to open a short position because I think it's going to go down. And so you spend typically less time. So the idea of a UT and a spring make perfect sense then. If you think about it from the standpoint of, I'm the operator, I've got the most money. What do I want to do right before we leave? Because this range is now exhausted. I want to go back and get those shares, or I want to go up and get that sell-off. And, they do certain things with the price action according to what we know as TA to mislead retail into thinking it's a breakout or a breakdown. And that way they can do the strong to weak, weak to strong hand kind of move. And that's why these liquidity charts are pretty important. I haven't really looked at it for this, but it can tell you a lot about possibility. I don't want to add another thing here, but I will anyways. So yeah, it can tell you a lot about where are we trading, where have we not traded. We haven't traded very much between 330 and 380. We haven't traded very much between 236 and 293. I'm just looking at this bar thing over here. There's liquidity gaps though. There's not a lot of buying that's actually happened until you get up to $8. Well, that's also a high liquidity shelf right there at 8. Does that make sense for us then, looking back at this? Like maybe that makes sense why we might come up here to distribute, because that's kind of a top range area. We can sell back down. We don't need to maybe buy a lot right here, but we could. So on and so forth. You just keep going with that. And you don't find that every range is the same. Sometimes there's more in the middle. That's what's happening here. That's the same thing that happened in 2020. There was a lot more trading in the center. a lot of ranges, there's more trading on tops and bottoms. They look like horns. But these end up being pretty important. Part of the reason is that, like, walk through here, they checked all these levels. There's not much of an argument to be made that the range is satisfied just because they moved on right there. Like, short term, yes, but bigger term, are they going to come back here and trade again in 10s and 11s? Probably. But not before they come down first, you know, and get what they want to get. They can get it on the way out, on the way back. So hopefully that makes sense. Yeah, it makes sense to me when I take it back to like simpler times. If you try to like think too much about computer algorithms and all this other stuff, yeah, that stuff exists. The mathematics of it is fun. I like it for the visual sine wave aspect of predicting price action, but it does not ultimately like tell you what's going on really with price action if you think about it. Like it's telling you, it's like describing it, but without actually giving you like the why. So I don't mind doing that, the description without the why. One thing that always leads to is the idea of fundamentals and news versus price action. And I get beat up a lot for this because people think that I don't believe in fundamentals or that I don't care about catalyst events or this or that. I don't know what to say. Like, yeah, they're all part of the same thing. Like, they all contribute to price action, as does the options chain, this whole other layer of people betting on direction of price. All of these things impact directional movement, as does politics. We're going to find out, you know. But I always feel like people kind of accuse me of not trading holistically, like I'm not looking at enough. I choose to look at what I want to look at based on the way that I understand the charts. Like, and I don't, there's things that I don't understand as well, and I don't like to dwell on those things as much. I'm learning those things as time goes on, but it's not something that I'm going to sit there and pretend like I have all this information about if I don't. So we learned how to do P&F charting this year. That was fun. You know, occasionally we'll dive into some options stuff, but largely what I've been focusing on the last couple of years is just remembering how the market moves and like why things happen based on institutional desires and what that looks like in terms of sine waves and waveform analysis. And yeah, it started with some fractal stuff. It's kind of moved away from a lot of that, but I feel pretty good about where I am. I'm not going to stay where I'm at. I'm always going to get better. So when people ask me about fundamental stuff, moving stuff, I think it's part of the game. And I typically just kind of chalk it up to somebody always knows something that I don't know, and I just don't know what I don't know. So if I think it could move, there could be a catalyst event there that's ready to take it up. I would never have been able to predict it. The weird thing about it is like the same thing happened back here when it distributed. When it came up, as soon as it made that top, this is when I got ran out of the other Discord group. I was run out of the other Discord group for talking about turning around. We came up here and I said I thought I was going to come back to 9. And everybody and their grandma was like saying I was wrong, which of course means that I'm wrong, right? Majority opinion always right. No, right? I'm not bitter. I'm not bitter about it. I'm really not that upset by it anymore. I don't care. But the idea of like coming back down was really offensive to people. But the thing is like it didn't do what it needed to do when it took off. It didn't check what it needed to check. That in the back of my head tells me there's something off. It's probable that it could come back and check it later. When I looked at the overall picture, there was a huge amount of obvious kind of signs that said we were going to come back to 9. When we came back up, I was hesitant and I thought we might end up going far, but I was like really worried about 1080. I remember being really worried about $10.80, right? You guys are like, well, this isn't here or there now. Why do you care about this now? It was like 1080 and like 1170 something. I don't remember. I don't remember what the numbers were, but like there was a number that I was concerned about because it needed to kind of breach it, but not too soon. And I remember it went too soon and I flipped. And this is roughly around the time when, like, I don't know, things were going crazy with some parts of my life, but like mostly with the Discord group that I was in. It was getting like insane. And yeah, and I thought it was going to flip and go down. And I was like starting to talk about $6. I'm like, man, this could come pretty low because this jumped the creek again. So it was missing like 2 major checks, and it had this massive downtrend established. My point is, I remember Ant's Trades, if that guy's still around. I don't know if he is. He used to like my stuff, then he just started like not liking my stuff or something, and his followers didn't either for whatever reason. I don't know. I'd never met the guy. I never talked to him before in my life. I have no idea what he's like. People tell me stuff. That's it. Like, I don't know him. But I remember he was saying, like, it's not going to go down to 6. It's not going to happen. Well, he didn't maybe say it like that. He just said he didn't think it was going to go to 6. And somebody in my group was saying that, you know, his followers were like making fun of me or something for that. This is kind of a silly thing to me because I had no idea that on earnings that Adam Aron was going to dilute, but he did. All I knew was that I had screwed up my trade because I was just focusing on what was happening. This top was starting to look like a top. It looked distributive. It looked like cat ears. It went too high and then it dropped too low. It opened and closed beneath the level it was supposed to. Like, it opened and closed and came back below. It was this little wick right there on the daily. And I was mad. All I was thinking about was mad because I couldn't get out on the shoulder. I thought I was going to head and shoulder. The shoulder was an after hours. It went up to like 1070 and then dropped, 1050 and then dropped. That was all I cared about. But like, I had no idea that he was going to dilute. The same thing back here, except that when it didn't move, I was like, it looks distributive to me. Based on what happened here at earnings, it pumped up too high and closed again beneath the support or beneath the resistance at 505, opened and closed beneath with a wick above. I was like, it doesn't look good. It looks bearish. And we just sat there forever, and I'm like, I wonder what we're waiting for because it looked bearish. Then dilution announcement, you know? So part of me is like, I 100% agree. I would never disagree that news can move the markets, or that catalyst events are real, or that we have to have a catalyst event sometimes to run. Those are things that are there. But if you had told me back in July, did I think it was going to go sideways till November this year and have no movement? My answer is no. And even then, we passed up several catalyst events. We had a big earnings announcement. We had about, you know, our debt. We had the rate cuts. Like, there's been plenty of moments that have come and gone that just didn't move the chart. There's just nothing you can really do to be 100% certain that a range is satisfied and ready to go to the next step. So it's frustrating because as much as I might get it right, there are plenty of times where the catalyst event isn't the right one, or it's just not there. But what I think is silly is this idea that, like, you then therefore can't do the technical analysis. There's a difference between being kind of open-minded and saying, yeah, maybe it needs a catalyst event. I'm still going to do the technical analysis because I still think it's important, versus saying more fatalistically, it doesn't matter what you do, it's never going to move until there's a catalyst. Well, if that were true, then I would never be able to call drops or runs. You know? So you just wouldn't be able to do it. You know? And where did the May run come from? You know, what catalyst event? I got an earnings miss on my screen right now. I mean, it was a very pure technical setup. You guys are like, it was Roaring Kitty. Well, I didn't know he existed. It was going to come back. It's not a hard thing to like kind of talk about for me, because I feel like it's the only people that really get up in arms about it are the people that just don't want to deal with TA anyways. So it's like, well, you don't want to deal with TA anyways, then you've already got your answer. You kind of like already have the outcome determined to the argument that you were trying to make. I'm kind of grazing through some of these other possibilities here, looking at other charts. MPW is not really one I want to talk about right now. There's a lot that can be said. I think it might need to come down to 385. It may need to have a big drop. I had on the short term doodled out like a kind of a miniature version of, it's funny too, it looks almost just like it. Like almost identical. It's kind of freaky. A miniature version of 2020 for AMC, because I'm operating under the assumption that this may be the way that the chart is trading right now. So I suspected it might come down back to the bottom, check some things, and it looks like it's making moves that way. But I don't know what's going to happen after its earnings, which is on Thursday. It's very close to AMC. This is Thursday morning. So AMC is Wednesday night. MPW's earnings is Thursday morning. And then both are going to have a day and a half or whatever, 2 days to trade after. So I guess they're both 2 days. So I think I did an upside down chart for this yesterday. I'm not going to go into high detail, but I think there's a decent chance that if it drops from here and doesn't immediately rebound, that it's going to go down to like 385. It's a 618 level. It's a kind of a magic number level for this chart right now. Part of me thinks that that's too low. Part of me doesn't think it's too low. So part of me has been looking at this and thinking, well, it really kind of already looks like it's aiming that way. And it's a creek jump that comes towards the bottom and checks it. It's a throwback. It is too far on the whole, you know, for me to be super comfortable. So that's a possibility. Another possibility is it doesn't go that low. It stays at like 450s pretty much. I think it could do both. I think it could have the drop and then the come back up towards 450s or whatever. Very similar, I know, numbers to AMC. It's a question mark in my head. There's a lot of things about MPW right here that look kind of bearish. And then there's some other things that just don't. Like, they just don't look bearish at all. And I'm not really sure. It's a bit of an enigma, but I'm not really sure what to do about it. You know, there's just pieces of it that I just don't have the answers for yet. So part of me definitely could see this as a very much a one-to-one setup right here with what we saw on AMC in 2020, that we're going to kind of distribute from these levels at 470s, come back down, you know, get ready to go later on. Another part of me wonders if I'm still a little off, and I have to do more on this. I'm not done yet. So the reason I'm kind of curious is that if I look at the timing for AMC and GME, it almost makes more sense for this to be like a middle M. And it's kind of like what happened in August 2022 with AMC, where it made the advance, went a little too high, comes really low, and then it does it again. And it's weird because I can't quite put my finger on it. It's one of those difficult ones. I haven't really had any major breakthroughs. So part of me thinks that there might be a big whip around from like 380 up to 8. And I know it seems a little odd because you're like, well, it already made a new high. It doesn't need to go up again, right? I know, but it just, it's why I'm trying to say, like, I'm just so hesitant because part of me looks at it like, no, it kind of seems bearish. I think it could drop it and then react low after they drop it back down to like, 350 or something. It would have to be like polar opposite, basically, of the AMC GME kind of stuff if that happened. And then some people are like, well, what if AMC just drops? Then they all go together. Yeah. I mean, there's that possibility too. AMC just never gets the second run and just dumps. But I don't have an answer yet. I feel really uncertain about it. So part of me thinks that it's possible that this is not going to be that cookie cutter, and it may end up being something where we don't ever really go way below again. One thing that stood out to me about MPW's chart, maybe that's worth mentioning, is on the weekly, it's just this idea that like we've been here before. So this was in the 2008 financial crisis and it just kind of hit and then left. And we've been here before, and at that time it came down really, really low. Like it came to 276. So one of the things that kind of strikes me as interesting is just this idea of like, we've kind of been here before, it's been traded previously, and I wonder if that has something to do with it. But like maybe we want to spend more time down here, sort of like a UTAD in reverse, where the second one can be like a lot longer. I know it's a little bit elementary perhaps, but what about everything else? Everything else kind of works out much the same. I think the difference is that this has a different starting point from what I can tell. It doesn't start at the same time. It starts in March, not September. Then AMC had like that September move. I really think this broke down first in March. So it's a March to March thing, which would kind of shift everything over and does give me more reason to conclude that it could have a run similar to them, but it may not be exactly the same. It's a little confusing. So you guys are like probably a little lost, but it's slower is what I'm trying to say. It's slower and it's slightly different timing. So I'm trying to not make it super one-to-one with AMC. But yeah, part of me was wondering if it does do this move up to 8s, does it really have to come back down again? I mean, it is a nice clean 50-50 down, but if it ended up going up, what if it stayed above 492? Then it could have a more regular buy-in. Like not every stock has to be identical, to AMC. So it's like, it's just complicated. There's a lot of nuance there perhaps, and I'm not done with it. I think the price driving to 385 makes sense short term. I think there's a possibility if it breaks back above 5 that it could see maybe like 530. It could see really high. It could go all the way up to like 8. Weirdly, 869 is also a target here. It's very strange. Some of this is just waveform stuff. Like, I don't know if it came up enough. It's sort of missing a final move here in this pocket in late November, so I'm not sure. I know, not answers. But once again, it's next week. we're going to have answers soon. So it'd be a crazy week, but someone had asked me about P-ton. I'm going to do that one and probably chill out. So it looks like whatever was asked about on P-ton already happened. It was probably this idea right here. It's a pretty good estimation. We'll come back up to that marker, and then I didn't know what was going to happen after that. You have a possibility it comes low, but it never does that. It really just took the high road. That looks almost exact, so I'm not really sure why. I don't know, there's not really much question to be asked here. Then, yeah, here's the other bar. I said I thought it was likely to come up to 650. I didn't think it was as likely that it would come up to the next level, which was 8, very similar levels, 870s, but I guess it did. So there you go. What else is there to know? I'm assuming I said it wasn't as likely because I didn't draw a line. I don't really remember. I vaguely remember. Yeah, I mean, on the big picture, if this is a legit break, I think we had talked about this being a target, but that could be very long term. So you take that with a grain of salt. Yeah, could come up to the 50s again. It's possible. Peloton Interactive, they may be, are they doing AI stuff? Maybe, I don't know. Yeah, I mean, the issue with this is it's leaving behind a wake of unchecked gaps and creeks and junk. So every time it's made a leg up here, it's kind of avoided a backwards move. Not ever really a great look. So while some folks will probably look at it and say, oh, it's just a big squeeze, maybe you'll keep going. It's not impossible. I mean, AMC went from 2 to 70. You know, it happens. I can't predict a squeeze if it just keeps squeezing. It'll just go up to like a halfway point somewhere and then maybe up here around like 11, then chill out. Have to find some ground in the middle. The problem with that maybe line of thinking is you're not thinking about a possible range. So one thing that always stands out is on these S-curves, where's the middle on these drop downs. So that's part of the reason why I had this one on. So I would make a mark at like 692. If it holds above it, I think you could see another leg up. And then, yeah, it's just a giant auto reaction. So it's probably a pretty massive area that it's covering. It's a hard one to know. That's your range though right there. So there's two pockets. So this is one right here around 690s, the other's at 1564. I mean, when we look at this kind of stuff, we look at those falling S-curves, the high heel. One of the things that we do is we look at the initial drop down, which I guess is like here, and it goes to like the liquid center, something like that. Or you can use the tippy tops. I don't know, man. This is a big one, so it's like hard to judge. It should be a displacement that makes sense. Like that's pretty big. I think it's this one right here. So yeah, this kind of suggests that it's going to build out a range. Maybe with this as the top, 1145. Like this is attempted distribution or attempted raising area distribution. But you can see the support was right there. So I think this is actually the anchored top area here. Yeah, it's a pretty good, simple way to look at it. So what I would say is that it looks like it might try to build a range roughly from where it bottomed at 281 up to 1138. If it kept going, it keeps going, you know. The only place I would probably maybe think about buying at this point, if it's me, is up here, which sounds kind of crazy, but maybe if it did the right things, you could see it kind of advance here. It just doesn't seem very likely. There's just a lot that could happen. It's like gaps all over the place. So yeah, I think it could have one more push. Maybe it pulls back to 7, and then maybe after elections it pushes up to 1138, and then it comes kind of crashing backwards. There's probably a trend that'll get broken. Yeah. So perhaps down into elections here, fill the gap, and then it starts racing back up, late November, whatever, and then it goes down. Much like the others, I think you could have a rally that then possibly then comes backwards. So I wouldn't be surprised if this gap never really fills. I think what might happen is they may adopt like a new bottom right here. Like I think this might end up being the setup for a little while. Is it trades between 11 and 4. I'm not sure. That's a big auto reaction, so maybe like a phase B run in June or summer. And then come back down. Really long. I mean, who knows? This is a hard one. Maybe it comes back down by 2026. And then generates a spring. I don't know, man. It's a long time to kind of ruminate, so it would make sense. And then you could do like a really simple either I say spring, but it's really a spring off this localized area. It's not a spring off of, well, it's like a macro spring. It's just to go check that gap. But there's a lot here, so and then this will be the halfway point from here to the top. And this gets you to where I actually want to go. Part of me wonders if that's already happened. You know, I'm kind of drawing the same thing again. Maybe it's already happened. This marker should indicate to some degree where it's going to go in the future, though. These downward trajectories here. There's a lot of them. Those ones are really good. Let me use those. Where are they going? Yes, he's going to the moon. Probably a little too far. I like that one better. Here. I think that one's stronger. Let's do a similar one here and see what that looks like. So from bottom here to the breakdown here, also agree. I think that looks stronger as a trajectory because you're saying like this is the wall that they were trying to push over. You see the distribution effort made there. Yeah, that follows. Then this is the intersection here. It's like a million light years away. But sensible. That doesn't look quite right on the weekly. Change the position of the line. It's about 133. I always ask myself, is it targeting something that makes sense? And yes. It's kind of a precise number. Maybe it's a little off, but it definitely makes sense. Kind of targeting the coming back up. Really long term. So this is very short term then by comparison. It's basically coming back and retesting that gap. So this could be like a 1, 2, 3, and then you get a 4, 5. Four, 5. You're like, that's awful, Booksy. I don't know. Just messing with it. Or maybe it just goes and fills like a gap here. And I don't know. Goes back down and back up again. I don't know. This is way in the future. This is a slower moving chart. So yeah, I couldn't tell you. I can give you those levels, and that's about as far as I'd take it for now. This feels right to me, but I think it's debatable. It's a little quick to assume different things. Yeah. I mean, a lot of people will look at this stuff and throw it away because they don't think it matters. But like this kind of stuff to me really matters. I see that there's a constant build right here. There's a constant chop, and that refusal to go forward isn't really a big deal at that time. I mean, it could be faster than that. But later, notice that like, because you're already like breaking down a number of levels. But like later on, it's pretty important. So I would say as a creek, that's already been jumped. But notice how that comes way down. It does come down again. It can be really nasty. As a more flexible creek that's been raised, I'd suggest that looks a little more accurate. Yeah, I don't know. I got no skin in the game, but this I would expect is possible. If it hooks underneath 680, I don't think that's a good thing. It'll probably just drop. But if it can manage to hold that level, I think it could go back up. So the reason I did it like this is because it's like a phase, like again, a phase B top, but that just takes some time to regenerate and go back up, and it holds the top range. Ultimately, when you look at the top, it just looks like a distribution, and that part of me wonders it could be very, very fast because you could come right back up, and then drop. But part of me just likes to just kind of give it a lot of space. The other part of me just gives it space just to give it space. So as a top, this would end up being like a distribution from all the shares that were bought down here at 2. If they can hold this level, then they'll be able to build a range here to redistribute. That's what I'm thinking. And then they would use a distribution to drive the price back down from 12 all the way back down to 4. That would go back and check a lot of boxes. And I don't know about the gap fill, but I think if it's going to do it, it would do it like here. I think it just takes off. Multi-year kind of thing. So stationary bikes. Oh, Peloton. Yeah. Well, they might use AI. It's a very long-term chart. That's what I'm going to say. I'll conclude with that. It doesn't look like anything has to happen right away. I'm kind of surprised it's as low as it was. So I think it was a good trade on your part. It was smart. That kind of stuff, if they can get a foothold, and Tesla doesn't come out with a bicycle or whatever, those are things that I can't, like, we don't know, but like, they're probably going to do very well in the future. So, all right, guys, with that, I'm out. Thanks for coming and tuning in, hanging out with me on a chill Friday. Lots of TA done. Briefly hit some other stocks, worked mostly on AMC. You guys have a great weekend, and I will catch up with you later.